Welcome back to the Bloomberg New Economy Forum. Please make your way to your seat. Our program will begin in 15 minutes. Please take your seats. Our program will begin shortly. As a courtesy to our speakers and those around you, we ask that you please silence all electronic devices at this time. Our program will begin in 5 minutes. Please make your way to your seat. Please take your seats. Our program will now begin. Please take your seats. Our program will now begin.
Years from now, how will we look back on this moment?
We will look to get more support to people as quickly as we can.
When security displaced prosperity.
People everywhere still prefer democracy as a preferred form of government, but are increasingly dubious about can it deliver.
When strategy supplanted synergy.
Trust is probably not the word I would use. We need to see action, and until we see action, there can be no trust.
There's still time to re-engage, to rebuild trust.
It is our responsibility to help build that world of peace, sustainable development, and human rights for all. I know we can do it.
This is day 2 of the Bloomberg New Economy Forum.
Please welcome to the stage Editor-in-Chief of Bloomberg, John Micklethwaite.
Thank you. I'm not sure whether that video was inspiring or chilling, but it sets the stage for this second day. I'm not going to spend a lot of time getting in the way of the program. Yesterday, we promised you, I think, basically geopolitics and systemic fragility, and I think we largely delivered it. We heard from China's Vice President, Prime Minister of Singapore, and of course Mike Bloomberg. I thought Singapore's Foreign Minister nicely summed up US-China relations. The weather might be getting better, but the climate is getting worse. I like Jim Rowan's quote from Volvo, which I thought encapsulated the way that our world is re-globalizing build where you sell, and source where you build. I'm afraid the award for pessimism there goes to Vjosa Osmani, the president of Kosovo, who reminded us no one wants to become a refugee, but each and every one of us can become one. Today, seizing the moment is our theme, and to do that, we have Ken Griffin, we have Sergio Motti, we have Hillary Clinton, and a lot of other people. I would once again like to thank our sponsors, who are usually behind us somewhere, but thank them once again for their help and support, and thank you for all your active participation yesterday. The feedback from the working groups in particular was one of huge audience participation. Please keep doing that. It's what makes this thing work. So with that, on with the show, and thank you very, very much.
Please welcome our panelists, co-founder and managing partner of Diameter Capital Partners, Scott Goodwin, CEO of FCLT Global, Sarah Williamson, Chairman of Alberta Investment Management Corp, Mark Wiseman, co-founder and CEO of Airwallex, Jack Zhang, and our moderator, Deputy Editor-in-Chief of Bloomberg, Reto Grigori.
Morning, everyone. Thank you very much for coming to seize this particular moment this morning. The title of our panel is The New Economic Era, where geopolitics has taken center stage, globalization is in retreat, and inflation is sticky. How do you invest or run a company in this new environment? And how do companies fund themselves when the easy money is gone? On top of that, we have massive technological change. Workers are worried that AI is going to replace them. And investors and companies are trying to figure out how to use AI to make their operations more efficient or to make more money. Before we get into it, we do a little bit of audience participation. We have a poll. There's a QR code coming up somewhere. And please vote. Basically, the question is, and we don't give a time frame, we'll talk about that in a bit, what's going to have the biggest impact on the global economy? Is it structurally higher inflation? Is it industrial policy, also known as resource nationalism? Is it the fragmentation of supply chains or AI? So please vote. I assume you all have a mobile phone. And we'll get going. And while we collect the results, let's begin with geopolitics. We'll hear from Bloomberg's chief economist, Tom Orlik, later this morning what the economic impact of the current geopolitical challenges could be. Without front-running Tom completely, I'll just say we're talking potentially hundreds of billions, if not trillions of dollars in lost output. Jack, I'd like to start with you. You run a cross-border payment company, and you obviously see changes in money flows or a slowdown in cross-border trade firsthand. What do you observe?
I think over the last 2 years, we see some dramatic change in the global money flow, and it's kind of getting even worse from our perspective. In the last quarter, give you some sort of examples. We see supply chains have been shifting from China to countries like Mexico, Indonesia, Vietnam, quite significantly in the last 2 years. And we also see cross-border trade or e-commerce in particular get banned by some of the South Asia countries recently. So they start to encouraging local sellers selling locally online. And some of the largest cross-border e-commerce social platform has been banned by, for example, the Indonesian government recently, which is quite a disaster for some of the smaller businesses selling cross-border. So those geopolitical issues definitely played a very significant role in these changes in the last 2 years. And funny thing is, though, even we see the money flow have shifted, but we also see some of the shift of entrepreneurs. For example, we have seen massive amount of factories being setting up by Chinese entrepreneurs in Mexico. So we kind of joking internally that the entrepreneurs like animals instead of plants, so they would travel around the world to fulfill the demand of the new, global supply chain landscape to try to survive in this new era of global economy.
What does that mean for your company? Did you have to shift resources to different places?
We definitely see this trend, that shifting to Latin America and the Middle East and some of the Southeast Asia countries. So recently we have done acquisition in Mexico of a payment company, so to strengthen our presence over there. As we see, as I said, the supply chain have shifted, the factory have moved, but the customer remain largely the same. And we also, getting our license in the Middle East, like UAE and Saudi, as well as sort of Brazil in Latin America. And those, investment is generally a multi-year investment and require a lot of pre-investment to set up the financial infrastructure over there, working with the central bank to get permission for the money flows going cross-border. Generally, the exotic currencies or countries have pretty stringent capital control requirement to automating that requirement to providing a seamless experience for our customer being top of the mind for the company, and which is the area that we are investing a lot of time and energy on.
Thank you. Sarah, you run an organization that helps people invest for the long term. Is there a long term with all these short-term shocks these days? And I don't mean the Keynesian long term where we're all dead.
There is a long term, and there will be a long term. The question is how to stay focused on the long term with all the short-term noise. And so the way that I think about it a little bit is for countries, what the countries are doing is thinking much more deeply about their critical skills, critical materials, critical supply chains in a way that has not been done in the past. So from a country point of view, we're seeing a real shift to not just competing for this quarter, but planning for the future. From a company level, the strategy is really changing. The conversations in the boardrooms are much less around, okay, how are we going to gain a little market share here? How are we going to cut costs here? And how are we going to play offense in this sort of environment if there's an opportunity for us, depending on where we're coming from, and how are we going to play defense? How are we going to protect ourselves because the shifts are so large? And then I think for the investors, there's a real shift. We all know the traditional risk-return framework, and risk has traditionally been measured in terms of short-term volatility. What do the markets do at any particular point in time? We're seeing people really trying to shift to much more of a risk-return resilience framework, which is thinking about, of course, the return over time, but also the short-term risk and resilience to some of these long-term trends. And so questions about, can we invest in a particular place, or would we perhaps have the keys taken off of us at the wrong time, are really driving investment conversations in a way that they were not just a few years ago.
Mark, you told my colleague Eric Schatzker the other day that, I quote, the world is facing a new paradigm with incalculable outcomes. You also mentioned how fast things are changing. Tell us about your 1,000-day analysis.
Well, look, I think in my 3 decades as a professional investor, this is by far the most difficult environment to operate in. Investors, by their nature, are trying to predict the future. You don't try and predict the future with, obviously, any certainty. You predict the future in terms of the probability of certain outcomes. Today, you can't calculate the probability of certain outcomes. The world has changed, and it's moving so fast in ways that none of us have ever expected, but also, importantly, in ways that we can't measure. You can measure the sensitivity to your portfolio of a change in interest rates. You can measure the duration risk in your portfolio. You can measure how much the price of oil may impact your portfolio, or the change in a currency rate. But the last 1,000 days, and it's only been 1,000 days, 1,000 days is not even the blink of an eye in human history. It's actually even not that long in a human lifetime. But the world has changed more and more unpredictably in the last 1,000 days than any time, in my view, since the Second World War. Let's think about it. 1,000 days ago, we were at the early innings of a global pandemic that we didn't really understand. 1,000 days ago, we were just starting to think about decoupling and the friction between China and the West. 1,000 days ago, no one thought there was going to be a war on the European continent. 1,000 days ago, the Middle East seemed to be headed in a very positive direction with the Abraham Accords, et cetera, taking hold. Today, all of those things have changed, and changed in a way that none of us could predict and none of us can measure. And so I think we are in a period of incredible, incredible uncertainty, not just in the world, but also in the way that we're going to deploy capital and the way that we are going to be able to fund the liabilities that we have for the long term. So I think investors have to think very, very differently how they go about doing their business. 1,000 days ago, I wouldn't have thought that having geopolitical experts on my investment staff was particularly important. Today, it may be all that matters as I try and make the calculus of risk and return and probabilities going forward. It's really hard, and I think we are in a completely new environment for anybody who's been in this business in their lifetime.
So, as a chairman of a pension fund, what do you do?
Well, first of all, I have a fantastic CIO who's here in the room, and I asked her to figure it all out on our behalf. No, look, I think what you have to do in terms of governing an organization, and those of us that have responsibility for the future financial stability of millions of people in the case of a pension fund, or the future financial stability of a country for those who are involved in a sovereign fund, or the future payments to clients for those who might be in the insurance industry, for example. And I think the responsibility today is to ensure that you are always thinking about those long-term liabilities, back to what Sarah said, but how do you reposition the way that you invest in your portfolio in a very different way to give people some certainty, in their lives in a world that is incredibly uncertain. If at least I can be sure that I'm going to have a pension when I retire, at least I can have some certainty that my insurance policy is going to pay out, or at least I can have some certainty that the funds are going to be there to improve my country, that can help. And so I think the responsibility on those of us that govern, or in the case of Marlene Puffer, our CIO, who work in this industry, I think the responsibility is even heavier on us today than it has been in the past, to make sure that we're trying the best we can to build a portfolio that's going to be sufficiently resilient with those incalculable odds in the long term, as Sarah says.
Scott, you're running one of the most successful credit hedge funds in the world. How do you take advantage of all the dislocations, maybe not long term, but short term?
Sure. I think the teens were about, the last decade was a lot about private equity, shareholder returns, dividends, buybacks, corporate management teams doing well. Now you're in an environment of higher realized inflation, higher realized volatility, and higher yields. And that means that the pensioners and savers that were robbed the past decade can have that return to them. So we see investment-grade corporate bond yields, 5%, 6%, 7%, very attractive, be that corporate or structured or mortgage. I'm sure we're going to talk about liquid versus illiquid, but make sure if you're going illiquid, you're getting paid for it. I like self-liquidating illiquids right now. So what do I mean when I say self-liquidating illiquids? Reinsurance premiums, due to all the weather volatility we're talking about due to climate change, have doubled or tripled in cat reinsurance over the past year. A lot of the money that was in that market has come out of it. Those are 1.5 to 2 year investments you can make, and that money comes back to you pretty quickly. Banks, the regulation of banks over the past 15 years has done two major things from an investor perspective for alternative credit or yield product. It's created this huge private credit market, which now you can get 10 to 12% for first lien risk, better than equity returns with ERP, certainly in the US, very low. And now it's creating, as regulation comes more in globally with the Basel IV on the forefront, regulatory capital opportunities where banks are looking to divest assets to people like ourselves or others, and we can write them synthetic or cash derivative trades and take some of that capital off their balance sheets, 1, 2, 3-year investments against high-quality revolver books, and get paid teens risk for very good, low underlying, good quality risk. And then finally, I think it's thinking about staying liquid, staying in that high-quality credit, and when there are the dislocations, when there are those volatility spikes, the Silicon Valley banks, the Credit Suisses, the Israel war, you can then deploy into more interesting things. So allocating to people who can make that deployment decision for you quickly. And you can deploy long term, but you have to deploy during the dislocations, not at sort of the generic valuations we're at right now.
You feel good about your portfolio at the moment?
Sorry? Yeah, I feel very good about my portfolio. I feel better about the future opportunity set because I think realized vol is great for us. It creates multiple bites at the apple to deploy into. And if you think about where credit's going over the next 2 to 4 years, you're going to have an elongated default cycle that looks much more like what you've seen in the 1970s, early 2000s, versus the central bank policies, a headwind now versus being a tailwind in a lot of the other cycles we've had the past 15 years.
Let's talk about resource nationalism or industrial policy. I mean, China has rare earths, the US has semiconductor know-how, Indonesia has nickel for batteries, for example. It seems like more and more we're seeing these crucial economies and technologies become the focus of economic statecraft as countries try to stay ahead in the global race. What does that mean for investors? Should they be piling into all these strategic opportunities or stay away because it's too political? Scott, maybe tell us about your experience.
I mean, real time right now, we're looking at a company in Panama. It's a Canadian company that was funded, a copper company, and there's been a populist movement to take away their mining contract. The equity is down by 60%, the debt's down by 30% in 2 weeks. There's a treaty between Panama and Canada that gives essentially $10 billion of capex back to the company if they take the asset away. You can buy the debt at a creative kind of $5 to $6 billion. So there are real-time opportunities being created by this economic nationalism. That's a specific one, but we see them pretty constantly. Europe is essentially given over its industrial economy to the U.S. and to Asia and the Middle East, but due to a lack of stimulative fiscal policy there. And we'll see what happens with that, but there are certainly bifurcated opportunities to make bets on positive things that are happening in the U.S. through the IRA, or some of the countries in Asia that are experiencing an increase in trade with the West, whereas other parts of the world are leaving themselves behind.
Sarah, there's of course another type of resource nationalism, that's money. Sovereign wealth funds are increasingly the primary source of cash for pretty much anyone. Can you share your perspective, and in particular where it leaves the U.S.?
Yeah. So I think, as you all know, the U.S. doesn't have a sovereign wealth fund. We have a balance sheet. We have a reserve currency. We have all sorts of other interesting things, but we don't have a sovereign wealth fund. And in fact, if you look at the 10 largest funds in the world, asset owners, so pension plans, sovereign wealth funds, et cetera, how many of them are American? This is a trivia question. The answer is 1. And it's probably one you may never have heard of, which is called the Federal Thrift Savings Program, which is essentially a bunch of computers in Virginia. So it is. So if you think about the resources that the United States has, we have, again, a lot of other resources. We have an ability to do the IRA. We have all sorts of other things. But we don't have that. And so I think an important thing to think about increasingly is where is the capital and how is that capital going to be deployed, less in this sort of old-fashioned risk-return mindset and more in this geopolitical mindset. So large funds that are based in the Gulf, for example, are thinking more about investing in their own economies, or many funds are thinking about they can invest in this country but not that country. And so I think that what we're seeing is the use of large funds as a tool, which has not historically been the case. They've actually tried very hard to stay out of politics and to be neutral money. And so we're seeing that shift right now.
Mark, give us a view from Canada. You have a lot of money.
Well, look, I think a couple of points that Sarah made are very important. First of all, I think we have to understand that, so I'll make 2 points. The first is I think we have to understand that it may very well be that the Ricardian idea of comparative advantage and Pareto optimality in the world is gone, that no one really cares about efficiency anymore. Policy is less important than politics. And that has a cost to it. Those of us who believe in the benefits of globalization are really seeing those benefits unspool. And don't underestimate the continued cost that has to the global economy and the added inflationary pressure that causes, both because of the cost of building resiliency into supply chain and other systems, but also the cost of this sort of economic nationalism from incentives that are created, like the IRA, all of which is inflationary in nature. So the first thing is, don't underestimate, as we unspool the benefits of, rightly or wrongly, of globalization, how much continued pressure that is going to have, in particular on national balance sheets, and what that is going to mean in terms of capital flows, interest rates, and so on. So I think we're still underestimating the global impact, and again, back to how everything has changed on the macroeconomic system. And I think there's more to come, and the disequilibrium in the system is going to continue to have very much unintended consequences. Great if you can figure it out running a hedge fund. I'll tell you, it's a hell of a lot harder for my brain to calculate. Secondly, industrial policy matters. And so to come back to Canada for a minute, countries need to have an industrial policy. They need to compete. If it's no longer about sort of comparative advantage and you have to compete everywhere because you're bringing more parts of your economy in-house, how is it that you're going to compete? How are you going to create industrial policy as a nation or as a state in order to win in this complex environment? And I look at my country of Canada. We are endowed with some incredible advantages, but I would posit that we have not had an industrial policy as a country in terms of, it takes very different thinking than we've had in the past, in terms of how we are going to compete hard in the world and win, and also at home. Canada's running a productivity deficit of 27% to the United States. That is not a sustainable position anymore. We can't rely on low-cost production in other parts of the world, and we don't have sufficient fiscal resources in the country to continue to benefit on the social programs that we've come to enjoy unless we can compete in the world. So what I would say is countries have to have today a robust industrial and national strategy of how they're going to compete. And if they don't do that, it's at their peril, because again, you can't rely on sort of globalization to get you to a point where there's some form of Pareto optimality and you just benefit from your comparative advantages, be it low-cost labor, be it because you have commodities, et cetera, just because you have them. So if you don't have a clear, cogent, and well-executed economic strategy, you're simply going to be left behind. I would say Canada is a great exhibit in that. There's several countries in Europe that I would point to that are also great exhibits in that argument. Meanwhile, I think our lunch is going to get eaten by places that do have that, like India.
I was just going to ask, who do you think is doing the best job in terms of industrial policy?
Well, look, I think if you look at the countries that, obviously we're sitting in Singapore, so here's a pretty good example. And people can always make excuses and say, well, Singapore's easy, it's a city-state. But policy in this case matters, but what matters almost as much as policy is the execution of that policy. So yes, it's easier to do in Singapore than it is in India, but I think if you look at what's taking place in India, there's a clear policy of where the country wants to go. That policy is integrated across the value chain, both politics and business, and it's making a difference. Is it sustainable? We'll see. But there's a strategy and there's execution. And so I would say that countries that have a clear, cogent industrial strategy and the execution to back that up are the ones that are going to win in this new paradigm. And if you rest on your laurels and you say that we're going to win because we have iron ore, or we're going to win because we have oil, or we're going to win because we have low-cost labor, or we're going to win because we've got an advantage in semiconductor manufacturing, or whatever it is. If you just make that assumption, you're not going to win. Not anymore. It's all changed.
I'd like to zoom out a little and talk about companies and funding models that are changing in this higher for longer interest rate environment. Jack and Scott, you're both company founders from a slightly earlier era. What advice do you have for the founders of the current generation? How do you get money? Jack?
I think the funding environment in the last 2 years is definitely the worst I've seen since I founded the company in 2015. Especially when it comes to building, I guess, infrastructure businesses that require a lot of upfront investment before you're able to generate real revenue. I think, I've been debating with a lot of investors, and we feel the boat have sailed a little bit, that is very few investors out there are willing to take the risk to investing hundreds of millions of dollars for a pre-revenue company. So it's going to be a challenge, apart from you and AI, which is a different story. I think, we in fintech, and fintech went from the darling of all investors around the world in 2021 to probably the worst performing sector in both the private and public markets. From an entrepreneur perspective, we see, that we need to really looking for investors from all regions. You can see a lot of investors being traveled to the Middle East. You can see a lot of entrepreneurs being traveled to the Middle East quite frequently to looking for capital, especially there's a lack of appetite for, US or European investors in investing in China-related business. So it's definitely a sort of trend for more kind of close relationship between the Middle East and then Chinese entrepreneurs. And even for the US and European investors and entrepreneurs there, we see also a lot of challenges, especially in the growth stage and late stage companies. The valuation have been compressed not by 10-20%, but 80-90%. And I think the lucky thing is most of the late stage companies that have been doing well in 2020, 2021 have raised a lot of capital, and they have more than 5 years of run rate, and they just need to growing, back to the valuation they were at a couple of years ago. Also, it's quite interesting for companies operating in a high interest rate environment. For example, Airwallex is cross-border payments and global banking business that, we have a few $1 billion of flows sitting on our balance sheet that kind of right now yield hundreds of millions of revenue, which is not the case a couple of years ago. How are we able to utilizing those capital to reinvest in the business, and how do we actually keep it sustainable for the long term for the company, which is another challenge. And we also, see the opportunity in the broader business, ecosystem. How can we launching product to sort of benefiting businesses operating globally, leveraging this high interest environment? For example, recently we launched a product called Yield, essentially allow businesses globally to invest in multi-currency, high interest rate sort of return product that by partner with JP Morgan. For example, businesses in Australia, a startup that raised capital in US dollar, traditionally they have to convert that back to Aussie dollar to earn interest. Now we allow you to invest in many currencies. In this case, we'll allow you to invest in US dollar to yield more than 5% on the capital you raise. You don't have to convert it back to Aussie dollar straight away. I think this is just different ways for businesses to leveraging the sort of environment that have changed quite significantly in the last 2 years.
You feel good about your own funding?
Well, from our own perspective, we fall into one of the lucky companies that raise a lot of capital. We raised about $1 billion in our history, but half of that is raised in 2021. And we have the companies lucky that now profitable, and we still have more than $500 million in the balance sheet. and they're still growing at 100%, and benefiting from we call reglobalization, which is what we just talked about. And I think that's gives us the opportunity to even investing more aggressively in this environment. As I said, I think a lot of companies struggle to get funding, in the last few years, and especially for infrastructure company. How do we actually balancing the profitability and the growth is kind of a very interesting topic, and we're in a very lucky place to continue able to grow, but with the sort of positive cash flow.
So when are you going to go public?
We'll figure something out when the equity market's back to the normalized level.
Okay, Scott.
Yeah, I'll be quick. So when we were raising the money for our first fund in 2017, and we were on the road marketing, we had a joke that seemed funny at the time was, the world needs another hedge fund about as much as it needs a global pandemic. And my partner John repeated it in all the meetings. It obviously wasn't very funny come 2020, and now we're doing private credit, so we had to redo the joke. But I think Jack hit the nail on the head. You want to, whatever business you're in fintech, you're in AI, you're in credit, you're in asset management, your asset and liability structure has to match. Right now, you're in a higher realized volatility environment, and whether you're a private investor, public investor, corporate company, if you're worried about your funding, it's going to massively distract you from what you're trying to do as a business. So you cannot have that be your number one concern. You need to solve for it and have someone that monitors it for you. But if that's what you're worried about every day, you're not going to be worried about running your business. So that's I'd say a really big thing that I would focus on. And then as you bring it back to what we did when we started, having people around us that could give us leverage. So as a founder, you kind of either move up and you delegate, or you stay doing and you build around. And we've stayed doing the job and built around ourselves. I think there are two models and they both can be successful.
We have the results from our poll, which have been up for a while. We were joking earlier that in the long term, AI will win, but it looks like geopolitics is number one, but we'll talk about AI.
They changed the questions, actually. They added geopolitics from from the four that we had before.
So anyway, geopolitics wins for now, but long term, obviously AI is huge. Everyone's talking about it, especially since ChatGPT burst into the public eye a year ago. Jack, let's start with you. You have a company. Is it all going to be AI, or is it already AI?
I think I asked the question I've lucky had a chance to ask the question to Sergey Brin, Eric Schmidt, ex-Google, and also Bezos, Amazon. And I was like, how big is AI? And all the answer is AI is bigger than the internet. It took me a while to digest. Remember, I had dinner with Eric Schmidt about sort of F1 in Singapore last year. And he said, there's some real breakthroughs in large language models in the last few months, and you're going to see some dramatic changes in AI. And I'm kind of skeptical at the time, but then ChatGPT came out a few months after that, and then just become a global phenomenon. And I think spending now kind of close to a year or over a year that digesting what it means for businesses around the world. I'm spending a lot of time with the folks at OpenAI, Stability AI, and just various sort of entrepreneurs around the world in this industry. One kind of conclusion, or a few points I wanted to point out. Number one, sort of productivity going to significantly increase. If you think about, what's the biggest technology shift in the last 15 years is the cloud. And the AI is only going to be bigger than the cloud. It become a fundamental infrastructure that injecting in consumers and in businesses' sort of everyday behavior. How businesses or any people sitting here that are able to leveraging that innovation into their own process or workflows and data going to be significant. I think there's going to be a lot of interesting companies benefit from this technology shift, just like the cloud. Some of the largest businesses thousands of billion-dollar software companies have born out of the cloud, and I think AI only gonna be bigger. I think a lot of the consumer behavior gonna be fundamentally changed in the next decade because of AI. Is the second point I want to make. And how can we leveraging this technology to innovate in this space? It's a very interesting topic. I mean, last point is like for B2B company like Airwallex or a payments company, we have a ton of data, and we're also servicing over 100,000 businesses around the world, competing with the traditional banks. How can we leveraging AI in servicing our businesses better? So we basically developing we call co-pilot strategy that in every single team within Airwallex, we actually will have a co-pilot, essentially the AI infrastructure or agent to help our employees to gain productivity on the job every day. And we're also building a lot of AI-empowered tools for our customer. How can we helping our customers' employee managing the expenses, managing the reimbursement, to submit or to fulfill the company policies, to increasing productivity. And then even think about long term, most of our employees in a sort of CFO office or in a G&A function spending time to doing ad hoc work. And this ad hoc work is very time consuming and now can be significantly the efficiency can be significantly increased because of AI. And we're also kind of thinking about the ERP landscape going to be fundamentally changed because of AI, instead of a workflow system, but will change to a more data-driven sort of AI approach in the next decade.
Sarah, the long-term perspective on AI.
Yeah. So yeah, we're the long-term people. We really think a lot about these long-term trends. We've talked a lot about, our shorthand is the 5 Ds of disruption. So we've talked a lot about deglobalization today. We've talked some about demographics over the last day or two. We think decarbonization is one of those long-term trends, which we shouldn't forget, deleveraging with higher rates, and then digitization to make our Ds work, or AI and generative AI in particular. And I think I would agree with Jack. This is really going to be a fundamental change. And the way that I think about what generative AI is doing is it's really taken your computer from being a tool to being your teammate. And I think what frustrates people about generative AI is the same thing that frustrates you about your teammates, which is they might be wrong, they might be biased, they might have an idea that you didn't think of. But that's what's so powerful about it. It is a brainstorming machine, not a calculating machine. And I think if we get our minds into that, the possibilities are really enormous. So I'll just give you one simple example of something I do in philanthropic side of my life, which is work with a biological institute that's related to MIT. They're trying to figure out, they were the ones who sequenced the genome, haven't figured it out yet. It's going to take a lot of time and a lot of money. But how do you build a virtual cell with AI? If you do that and you can experiment on it, then just think about the possibilities that are unlocked that are way beyond making our businesses a little bit more efficient. So I think this is the next big thing. I don't think we know what it's going to do, but I think we need to think of it as a teammate, as a brainstorm machine, not as an answer machine, and that will help us.
Mark.
So look, the only thing I would say about generative AI, I think it will change the world, but it's going to change the world. It's going to take longer for it to change the world than any of us think. Every time there's a new technology, especially those that are around it, believe that adoption is going to be unbelievably quick. And it turns out that adoption is actually really, really slow until it isn't. And then adoption takes off. And this will follow inevitably the same pattern. Those that are very close to it believe it's going to change everything tomorrow. But in the reality is, adoption takes a very long time. Use cases and the best use cases aren't necessarily the ones that we imagined early on. Eventually, you hit a tipping point in adoption, and the adoption ends up being much more rapid than people anticipate. But let's just look about autonomous vehicles. Let's just take that as a simple example. If we were sitting here 5 years ago at some sort of forum like this, we would have talked about how fast autonomous vehicles were going to change the world. You've heard the discussion. Remember, the number one job in the United States for middle-aged white males? Truck driver, right? By 2024, they're all going to be out of business. What's that going to mean to the world? There's not going to be a single truck driver left in the United States. They're all going to vote for Donald Trump, and we're all in big trouble. Now, it may be that they all voted for Donald Trump, but there's not a single autonomous truck yet on the road operating in the United States. Will there be? Yes, but it's going to take a lot longer, and when the adoption does start, it will be actually a lot quicker than we thought. As it relates to generative AI, we're going to be in the same boat as we've been in other technologies. It will change the world. It'll change the world in ways that we don't necessarily anticipate, and it'll take longer for it to take place. So I think the amount of excitement over it is well-founded. But I mean, check yourself, in my view, before you load up on another few thousand shares of NVIDIA.
I actually respectfully disagree on that point. I think generative AI gonna change faster than anyone will imagine in the next few years.
And that's what makes a market.
Yeah. Scott, your perspective?
Yeah, I think that, is it Google and it's an accelerant for everyone? Is it the internet, or is it Amazon, where it's capital destructive for all the competitors? And I think first it's Google. It's going to be an accelerant and make everyone better, and then it's Amazon. And my investors aren't paying me to find the next. Let's assume that Google, Meta, NVIDIA, the winners are known to some extent. The easier money for us to make around this theme is going to be shorting the losers.
Right.
The next 5 to 10 years.
What are the losers?
Well, I think
10 seconds.
Call centers, clerical legal jobs, anything that involves paper pushing that can be easily digitized are obvious losers. And when we think about shorting credit, the equity put and the credit put are usually at very different strikes. Technological change brings them to the same strike, which gets really interesting. In terms of our team, we're using it, but the problem is it's based on backward-looking information. It's all based on historical data, and it tends to lie. So we had our analyst, who's our retail analyst, looking. He asked it. I think Cole said we're having higher defaults on our credit card portfolios. He said, look back 30 years is a sign of defaults on corporate earnings calls in credit card portfolios. What does that mean for consumer behavior the next 6 months? And it made up 10 quotes. Bard did. Mm-hmm. So you can't necessarily trust the output yet, which is a bit of an issue. So I think it's a helpful tool, but in terms of our investment team, we need humans to make the decisions because it doesn't tell you the truth all the time.
I'm going with the replacement of panel moderators as your...
Next year, there will be an avatar of me. Sadly, we're out of time. That was fun. Thank you so much. Thank you for listening.
Please welcome to the stage founder and CEO of Citadel, Ken Griffin, and editorial director of Bloomberg New Economy, Eric Schatzker.
Good morning, everyone. Ken, welcome back to the New Economy Forum.
It's great to be here.
It's great to have you here. I'm going to begin with the word on everybody's lips, not only here in Singapore, but everywhere in business and finance across the globe. Geopolitics. But the way I want to phrase this to you is perhaps a little bit different, or at least in search of something different than what we've heard from your fellow speakers thus far. You and I, and everyone here, grew up during an aberrant period in world history. there were no major wars. And we enjoyed the benefits of peace, multilateral cooperation, scientific collaboration, the economic efficiencies of globalization and freely flowing capital, a massive reduction in poverty, moderate inflation, and a mostly relentless upward trend in asset prices. Is that era over?
I sure hope not, because it's been a really good era for us. But regretfully, the peace dividend is clearly at the end of the road. No matter what one may dream to be reality, reality is there's two wars in the world right here, right now, one of which is in Europe. So there's no doubt that the NATO countries are going to have to increase defense budgets over the years ahead. That's going to come at a point in time where governments around the world are already struggling with the sizes of their deficits. And then when it comes to globalization, I mean, we're in Singapore. We are at one of the global nexus in the world of trade, of finance. Many of us in this room have been tremendous beneficiaries of globalization. And it hasn't been great for everybody, to be clear. But for the world as a whole, it's pulled 1 billion people out of poverty. But now we're talking about deglobalization. We're talking about re-architecting supply chains. And some of this is rooted in the behavior that we saw in the pandemic. We saw countries hoarding personal safety equipment. We saw the tension around the distribution of vaccines around the world. Countries are much more sensitive to what do we want to have created domestically so that we're not reliant upon global trade. And then take that into the general geopolitical trends right here, right now. The war in the Ukraine has resulted in Europe losing access to natural gas from Russia for all intents and purposes. Europe struggling to deal with how does it maintain its economy having lost its cheap source of energy. So there's many trends at play right now that are pushing us towards deglobalization. And with that is almost certainly a trend towards higher baseline inflation.
Over what period?
It could be for decades.
And the implications of higher inflation might be obvious to some, but I think we'd all like to hear it from Ken Griffin.
Well, it depends on where this baseline effect lands. If we're looking at a 2 or 3% baseline effect, in some sense, the central bank will have a much easier job in the United States. The struggle over the last 20 years has actually been to hit a 2% target. And there's a variety of reasons that you want a low level of background inflation. It helps to lubricate the wheels of commerce. And that number the Fed has committed to as being 2%, they're going to fight pretty hard to keep that as the target for a litany of good reasons. But it also means that we're likely to see higher real rates, and we're likely to see higher nominal rates, and that will have a real implication on the cost of funding our enormous deficit. The U.S. has $33 trillion of debt outstanding. We didn't plan for an era with higher nominal and higher real rates when we went on the spending spree that created a $33 trillion deficit.
You have been warning about the unsustainability of U.S. debt, and America, to be clear, is not the only developed country that has a heavy debt load for quite a long time. You would know better when you started to talk about this than I do. But up to now, Ken, it appears that nobody in the U.S. government, at the very least, Republican or Democrat, has taken those warnings to heart. And when I say nobody, of course, there are other people in government who say the same things, but the government itself hasn't done anything about it. Is this moment in time when we've seen 10-year Treasury yields hit 5%, they've backed off slightly, but in that neighborhood, is this the moment when everybody wakes up to the as you would put it, unsustainable realities of deficits and debt?
So first of all, I think there's an awakening taking place, but it's going to take time. It's going to take time. And nothing like mortgages at 7 and 8% to push the body politic to start to wake up to the consequences of the scale of the deficit we're currently running. You know, there's no doubt that a big part of the move in the 10-year this year has been driven by the realization we're in a full growth economy, full employment economy, and we're going to run almost a $2 trillion deficit this year. Like, in some sense, you're supposed to save in this moment in time for the rainy day, and yet we're spending at the government level like a drunken sailor. And the challenge with this is actually a variety of different challenges. Number one is when you're spending too much on your credit card, like you feel really good in the here and now, but in the back of your mind, there's that gnawing feeling that this isn't going to end well. And I think that's part of why the American consumer is just not as happy as you'd expect them to be. They're seeing the impact of inflation. They're seeing the impact of a dysfunctional set of regulatory policies. And they know in the back of their mind that we can't sustain this level of government spending. Like the amount of economic malaise right now in America relative to where unemployment is, almost 10 million open jobs, is a stunning phenomenon. And I think the American people just understand deep down that something's not quite right.
Do you think the risk-free status of Treasury debt, is it all in question?
Well, one thing to remember is that the United States has the ability to always print dollars. Europe does not. So in the European Union, you just can't print euros as a member country. That's why Greece had its back against the wall. They just couldn't print euros. That forced a restructuring to take place. Now, to be clear, the minute we start to print dollars to deal with the possibility of default, our economy is in a deep tailspin. So it's a theoretical possibility that we can go there, but the economic consequences would be devastating. Big picture, though, there's no IMF for America. If the United States came off the rails with respect to its debt and its ability to service its debt, the effect on the global economy, not just the U.S. economy, would be stunning. There is no IMF for America.
The consensus so far among your fellow speakers is that the world is unstable, that power, the distribution of global power hasn't been this diffuse since the turn of the 20th century, and because of that, the risks to the global economy are as great as they've been in decades. Do you agree?
Well, actually, I'm going to go back to the last point for just a moment. Talking about the deficit in America is something every business leader should do. If we're going
So in other words, while we're all talking about geopolitics, we should be talking about the deficit?
We should. We should. We need to put America's fiscal house in order. And until Washington hears it from enough people, we're just going to keep using the credit card until the day comes where no one's willing to pay for it. Like, if we can't have that conversation, who's going to have it?
I don't want to go too far, much further down that rabbit hole, but up until now, what's to say that somebody will end up holding the Treasury Department's feet to the fire? Hasn't happened yet?
So I was actually with
or maybe not since days of the bond vigilantes.
A number of the senior members of the House just a week ago. In the top 3 conversations, the deficit was on every single person's lips. They're starting to get the message. They get it from the family that can't buy its first home. They're getting the message. But we need to keep pushing that message as the business community, as the financial community, to the American people, who are the American voters, who will start to demand that we put our house in order.
So allow me for a moment to go back to geopolitics, because interest rate risk is something that you can predict up to a point. Geopolitical risk is much harder to model. How, as arguably the world's most successful risk manager, you have to be the world's most successful risk manager to run the world's most successful hedge fund, do you manage geopolitical risk?
Well, I wish that statement were actually true.
I hate it when he attacks the premise of my question.
All right, and one of the things that we spend a lot of time on is to try to be a great risk manager, but there is a real art to risk management, and unfortunately, it's not until you have the benefit of hindsight that you actually know how well you were as a risk manager. All right, so just first and foremost, everybody who's in the business of managing money, we're all learning to be better risk managers, but you can't take that for granted. That's not like a God-given right just because you've made money. you're a good risk manager. Now, we look in our risk management, we look at a variety of historical scenarios and how that impacts our portfolio. And then we're always, when there are events on the horizon, there are events that are being talked about amongst geopolitical analysts, we will start to run stress tests. If that happens, what do we think it means for our portfolio? So before the war in the Ukraine started, obviously we could see the amassing of the troops on the border. What happens if a war breaks out? And we're thinking about how do we reshape the portfolio in light of that possibility. Right now, front and center is if we head into recession in the United States sometime next year, what's that mean for our portfolio? So you can think about all the different scenarios that people talk about in the media, amongst the analyst community. And then you start to think about what scenarios, how will that affect asset prices, and how will our portfolio holistically perform if that unfolds?
So what kinds of, those again are known knowns. The possibility of a recession in the United States is a known known. It may not happen, but it's certainly within the field of view. What about the left tail outcomes? Certainly the kinds that you encounter in geopolitics
Eric,
that are harder to model.
Blunt, in the known knowns is where most people lose their firms. I mean, just
mismanaging the known knowns.
Silicon Valley Bank. I mean, really? You lost a depository with $200 and some billion of deposits because you couldn't measure your interest rate risk? Like, that is the basic core function of a bank, is asset liability management and the management of interest rate risk. They didn't go out of business because of an esoteric derivatives portfolio. They went out of business because they borrowed short through their deposit base and put the money into 10-year bonds. So never underestimate the importance of just block and tackle basic risk management.
Okay, so the root of almost all financial crises is an asset liability mismatch, usually amplified by a considerable amount of leverage.
So that
yes,
is,
no,
that
mostly
is the
true?
root of most crises in the banking system.
What about in the financial system, beyond banking?
So the question is the capital that's been deployed capital of a nature that can absorb the loss? That's the question. So when people think about their equity allocation, they do realize they could have a 15, 20, 30% drawdown. That's part of their mental model when they make that allocation. It's when capital's deployed in a strategy where the capital doesn't have the ability to absorb the loss that you see real shocks rip through the system. Whether it's the banking system, highly levered, they're funded with deposits and money market issuance, they don't have the ability to absorb loss.
The reason, well, I'm glad you brought it up, and the reason I want to go a little further in this topic is because there's a lot of leverage in the industry of which Citadel is a part, the multi-manager hedge fund industry. And again, going back to the need for risk management, you guys have done it well up until now, may continue to do it well in the future. Not every hedge fund is as good. One of your peers, a firm called Schoenfeld, recently required a bailout by another one of your peers. What if, Ken, that does become a problem? What if there is a significant amount of asset liability mismatch in the multi-manager hedge fund industry and things begin to go pear-shaped?
Well, let's think about the choice of words here, and it'll say everything. Schoenfeld, bailout. I think they're up for the year. I literally think their P&L is up for the year. Like, when you refer to an industry as being in distress when the investors have still made money, that's a pretty good industry. That's a pretty good industry. And I really think that drives home the point that hedge funds almost never meet their demise in bankruptcy or receivership like Silicon Valley Bank. They meet their demise because they have mediocre performance for a period of time, and investors seek to withdraw their capital. Now, Schoenfeld's had a period here of weaker performance. It happens to great firms. It happens to poor firms. You can't draw a conclusion based on 18 months, in my opinion. They've had some withdrawals, and they're raising new money. Like, this is just the nature of how capital flows through a system. and it'll be up to them to prove to their current and future investors that they can deliver. But if bailout is the word that we're using for a firm that's up modestly, that's a pretty good place to be from an industry perspective.
I'll rephrase the question. Do you worry at all about the amount of leverage in the multi-manager hedge fund industry?
I worry more about the correlation of holdings between the firms. So if I own a given stock, there's a higher average that that stock is also owned by other multi-strategy managers. And that means that if one of us is forced to liquidate that position for whatever reason, that will have cross effects across our holdings. We saw this in the Stat Arb community back in 2007, the infamous quant quake. The Stat Arb community, generally speaking, has a variety of alphas based, many of them based on academic research, many of them understood from very just clear historical correlation patterns. And it's not surprising that if one firm finds itself facing an exogenous shock and they start to liquidate risk, that creates losses for competitors. But losses against your equity capital base aren't going to put you out of business in almost any scenario with this type of cross-holding phenomena. The losses relative to your equity capital base just are not expectationally going to be that large. They're going to be painful, don't get me wrong. Like, I hate losing money. But we're going to get through those moments by and large.
You and the rest of your industry. In other words, if I interpret what you're saying to me correctly, you don't see a systemic level of risk there.
I definitely don't think the word systemic applies. I think, could you see the multi-managers, hedge funds, take a joint 10, 15, 20% hit to their equity? It's possible.
It's
possible. That's painful, but not systemic.
Ken, last year we spoke at length about U.S.-China relations. You said, and I quote you directly.
Just to give you go back to the pandemic, go back to the first few weeks of the pandemic, and you saw a number of multi-strategy hedge fund managers down somewhere between 4 and 8%. So you saw this play out. Like, we actually have a real life study of what that starts to look like in a moment of panic.
Well, not just because of what was happening in hedge funds, but that situation did require an unprecedented liquidity injection from the Fed and central banks around the world. That is, we don't want to go back there.
Well, so let's be clear. We needed a liquidity injection to the system because people became unemployed overnight. You sent home tens of millions of Americans from work, and I was in the White House. We need to get checks into the hands of American families that have no savings. I mean, can you imagine being a waitress and literally it's like, we're going to put the now closed sign on the restaurant, and I don't know when we open back up. So the move by the Trump administration to get those checks into the hands of the American people, and we saw various permutations of this around the world, was unprecedented and necessary.
I was getting into China because I think we need to talk about it. And I was about to quote you directly. This is from last year. Ken said, structurally, the trade war with China is a huge loss for humanity. And we also talked about the US-led restrictions on Chinese access to advanced semiconductors. And you warned about a bifurcation of the global tech stack and the possibility that it could inspire President Xi to perhaps attack Taiwan. And I bring this up because since then, the evidence has mounted that China is using these chips for military and intelligence purposes as part of a campaign to challenge the United States internationally, undermine U.S. security, and weaken U.S. democracy. And Christopher Wray, the FBI director, put it this way: no country represents a broader, more severe threat to our ideas, our innovation, our economic security than China. So I'm curious, given the 12 months have passed, and we now know some of these things, if your thoughts, your opinion on the value of trading with, investing in, maybe even trusting China with our technology has changed at all.
Well, so this comes down to competing interests. Do we want a world of cleaner energy? China leads in EVs. China leads in solar. China is one of the few countries making a huge investment in nuclear again. And we desperately need nuclear in the West. We need a way to have baseload power that's cost-effective and clean. So it's a series of trade-offs. And when we chose to deprive China of access to semiconductors, I made the point, I don't know if it was here or in other forums, we're just going to inspire them to double down on their research and development.
No, you said it here, I remember.
All right, and Huawei did just that. They cracked the code of how to create a competitive 5G phone that competes with all the best of the West. And they did it, frankly, a blink of an eye. So it's going to be hard to just sever. If we could just snap our fingers and sever our relationship with China, do you think we really come out ahead?
That's the question.
And I think they have 1.4 billion people who are going to prove to us that we were wrong. They graduate far more STEM graduates every year. The Australians recently, at one of their top think tanks, did an analysis of the, I think it was the 44 most important developing technologies in the world. China leads in 37.
So in spite of what...
So I believe the U.S. strategy needs to be, how do we become better at being a competitor? How do we improve K-12 education? How do we improve our university education to focus more on STEM degrees? How do we strengthen American business and American innovation to beat the Chinese on a global stage?
And it's okay to continue selling China, 3-nanometer lithography equipment.
So I think that's a really interesting debate. If we're going to withhold but not put our house in order, that's a huge mistake. Because once they catch us, they're going to lap us. So if we're going to go there, it should be tied to a set of domestic policies around creating long-term American competitiveness. And we haven't done the second part of the equation.
The battleground is no longer just in technology. Recently, the United States imposed a very small number of restrictions on the flow of capital to Chinese venture capital, and specifically startups that are engaged in military research. What if capital becomes a tool of economic statecraft?
What if?
Yes.
It has been for...
Well,
it's been that way for a very long time.
But in these terms, if countries start to prevent to a much greater degree the flow of capital to places like China, for example.
Well, look at the history of Europe. For several hundred years, the country that had the gold was the country that had the military, was the country that won the war. This is not new in the history of humanity. And our national security comes down to our economic vibrancy. And that sometimes seems to be lost in Washington. If we want to have a very strong national defense and national security posture, give me a really strong economy as a baseline starting point.
The rise of artificial intelligence is both exciting and to many people terrifying. Citadel has been experimenting with and incorporating AI into its businesses for years. What have you learned?
So machine learning was first developed in roughly the 1990s. And Google pulled this body of knowledge out of almost the dustbins of academia and applied it in a massive way to improve search optimization. And when they open sourced that body of knowledge as TensorFlow, it changed the world. Because the power of machine learning was lost upon us in the 1990s because we didn't have the computational power to fit a modern neural network. And Google made the unprecedented investment to build enough computational power to solve a really important machine learning problem, which was search optimization. The rest of us have been in the wake of that great success ever since. At Citadel, we looked at TensorFlow literally within a day or two of announcement. And a small group of my colleagues said, we're going to see what we can do with this. And we had a follow-up meeting about 2 or 3 weeks later. I said, well, what are our initial thoughts? It was already in production. We were already using that branch of technology to impact how we priced and traded securities. And it was that groundbreaking that I had colleagues that literally worked like practically 24 hours a day for 10 days in a row to make it happen. They were just that excited about it. Now, generative AI is the next new thing in machine learning. And part of the reason I think it captivates humans so much is it produces written words. It produces images that we can see and understand and appreciate. In contrast to what we did 10 years ago, where you would just get a vector of numbers. It'd just be like gobbledygook to the human eye. But when you produce written word, you produce an image, that's something that you go, wow. Now, this branch of machine learning will have real impact on Hollywood, on creating content, on managing call centers, on helping to summarize research, on helping to automate routine and repetitive tasks. It's going to be a big impact on the economy, and it will help to spur the next cycle of investment in technology, even if that technology only makes an ancillary use of this new set of tools. I think that's an important point to make. Like, this will be another wake-up call for corporate America to focus on how to create productivity gains.
Any lessons from Citadel's experience?
With respect to generative AI, I think we're in the early innings. I mean, there are clear wins. We already use Microsoft's Copilot tools. It increases our productivity of our developers by roughly 10%. When you've got about 1,500 software engineers, that's like 150 people show up for work every day, and they don't demand benefits. And that's really important, because that gives us the ability to take on a whole variety of new projects that we just didn't have the resources for 6 or 12 months ago. So we're seeing clear productivity gains there. We see it in the manipulation of data that was done by people, like tagging data, a variety of low-level tasks. And we like to automate those jobs. You know, at Citadel, it's very important that our value proposition to our employees is about a career. So every chance we have to eliminate jobs, we take that. We want to create careers for people that come to Citadel.
I have to spend a couple of minutes on this topic. The United States is 12 months away from an election, arguably a very consequential election. Who are you rooting for?
Well, right now there's a debate taking place.
Yes. Lately you've been saying approving things about Nikki Haley in particular, her foreign policy position. What should we read into that?
Look, I hope she has a great night tonight. I really do.
And if she does?
If she does, I think that could be a galvanizing moment for her campaign.
Can she beat Trump in a primary?
We'll find out.
We will find out, but I'm interested in your opinion.
It's going to come down to how does the American public incorporate the legal morass that former President Trump's enmeshed in. There's no doubt a huge portion of this legal morass is the politicization of our judiciary. There's no doubt.
You believe that? He's being politically persecuted?
100%.
That the charges against him are flimsy?
I think a number of these charges are really flimsy.
Which ones?
How much time do we have here today?
There aren't that many charges.
No, I think it's somewhere like 90.
Well, which case in particular do you think is most suspect?
Well, okay. Let's go to Georgia for a moment. And I'm really curious to see where this lands. But when you argue there's this great conspiracy to deprive the American people of a democracy, and then you allow people to agree to testify on behalf of the government, and the ramifications for the crime that they committed as part of this great conspiracy to destroy democracy in America is borderline community service.
So the sweetheart deal, effectively, that the government has struck with these defendants who have pleaded guilty is enough to make that case
It feels pretty flimsy at that point in time.
Okay. What about the insurrection case, Jack Smith's prosecution?
We'll see what he has in the way of facts there.
Okay.
I mean, one of the questions is, what did Trump know and believe?
That is most definitely one of the most important questions.
All right. And so President Biden was very happy to tell millions of Americans that he was going to forgive their student loans. The DOJ, the government told him, you can't do this. It didn't stop him from making that statement.
It did ultimately stop it from happening.
And to be clear, President Biden is President of the United States of America.
If the election were held today, knowing what you know about both Joe Biden and Donald Trump, who is, of course, leading the polls as the potential Republican nominee, who would you vote for?
What are my write-in choices?
You're choosing between Joe Biden and Donald Trump.
Well, I mean, right, I'll be right to the point. It's 12 months further out. What is each of these individuals' state of mental health?
This is an excellent question, one that, of course, I can't answer.
No, I think it's an important question because we're in two wars right now in the world, okay? The United States is on the periphery, but instrumental to supporting the Ukraine right now. And if the Ukraine falls, the next border is NATO.
Oh, I think
All right? So
we get the picture.
So of sound mind will be really important when it comes time to pick who's going to be president.
So, as I say, if it were today, who would you pick?
I'm going to wait for 12 months. I'm going to see where people's mental capacity is. And let's be clear. There's another talking point that I've been on nonstop. I would love to see two candidates from each party who are each 20 years younger. Like, that's the heartbreaking part of the story.
Well, as you point out, the Republican debate that is happening more or less right now, Donald Trump isn't participating, Nikki Haley is, Ron DeSantis is, other potential nominees for the Republican Party are. We'll see how they do. Ken, it's always a pleasure. Thank you for joining us at the New Economy Forum.
Please welcome to the stage Chief Economist of Bloomberg Economics, Tom Orlik.
Well, it's great to be here, standing on what I guess is the New Economy Forum's answer to Pride Rock from the film The Lion King. Now, from Brexit to the US-China trade war, to Russia's invasion of Ukraine, to the bloody conflict unfolding in the Middle East, it's clear that geopolitics is back as a significant driver of global economic and market outcomes. So today, I'm going to spend a few minutes trying to put a price on the cost of those geopolitical shocks. And let's start with the US-China trade war, the moment when former and who knows, perhaps also future US President Donald Trump imposed tariffs on US imports from China. Now, my team at Bloomberg Economics waded through an counterfactual scenario where no trade war took place. As you can see from the gap between that white line and that pink line on the between the gap between that white line and that pink line in the chart on the left, the impact is about $150 billion in lost Chinese exports. Bad news for the export factories of China's Guangdong, Zhejiang, and Jiangsu provinces, Bad news also for US consumers who faced higher costs. Let's spin the globe around and think about what's happening in Russia. Now, the sweeping sanctions imposed on Russia as a consequence of its war of aggression against Ukraine haven't resulted in the immediate cratering of the economy and financial system that many expected, but there's still a significant slow burn drag. We think the right way to think about that is through the lens of what happened to South Africa during the period of apartheid, when South Africa's growth suffered from its self-inflicted autarky, self-inflicted isolation from the global trade and financial system. For Russia, we think that means by 2026, GDP is going to be 8% smaller than it would have been if Putin's tanks had stayed on the Russian side of the border. War in the Middle East is already a human tragedy. If fighting stays confined to Gaza, the impact on the global economy is likely to be pretty limited. If the conflict expands, though, and in particular, if Israel and Iran, those two old regional enemies, start firing missiles at each other, the impact on global growth could be severe. Using the template of the first Gulf War at the beginning of the 1990s, we modeled a scenario where global oil prices rise to $150 a barrel, and there's a significant risk-off shock in global financial markets. If that happens, our models tell us that global growth next year would be lower by 1 percentage point, a drag on global GDP of around $1 trillion. In the world of geopolitical risk, though, the biggest shock has yet to occur. There is arguably no more important economy for global supply chains than that of Taiwan. Everybody from Apple with their smartphones to NVIDIA with their AI chips relies on Taiwan's semiconductors as the essential component, the golden screw without which their production grinds to a halt. If we add up the total market capitalization of the biggest customers for TSMC, Taiwan Semiconductor Manufacturing Corporation, we get to a total of close to $7 trillion. Could we move to the next slide, please? Thank you. What happens if an earthquake, real or metaphorical, takes Taiwan's semiconductor production offline for a year? Well, we looked at the output of sectors from smartphones to tablets to laptops to automobiles to home electronics, which rely on Taiwan's semiconductors, and we estimated what would happen to production in those sectors if they lost access to those crucial inputs. If we could move to the next slide, please. That exercise tells us that an earthquake in Taiwan would impose a cost on global GDP of around 4%, comparable to the catastrophic impact of the global financial crisis or the COVID pandemic. We can move to the next slide, please. How likely is that geopolitical earthquake to occur? Well, I think one thing is clear, and that's that putting precise probabilities on geopolitical risks is a tough thing to do. The background, though, is not encouraging. Let's look at what's happening to the composition of global GDP. As you can see in this chart, we're going through a grand reversal. In 2001, the advanced economies, the G7, accounted for 43% of global GDP, and the BRICS just 24%. Fast forward to 2040, and those shares will have reversed. The G7 share will have retreated to 20%, and the BRICS share advanced to 40%. Now, let's be clear, the economics behind this are positive. Good news, not bad news. The fact that billions of people in China and India and Indonesia and other emerging markets will be enjoying the benefits of stronger growth, higher incomes, rising prosperity is a positive, not a negative. At the same time, this transition is a dangerous moment for the global economy. A moment when emerging powers are flexing their muscles, a moment when established powers fear losing their grip, a moment when miscalculations can take place and crises which no one intended can break out. How do we hedge against those risks? You can move to the next slide, please. Well, here I would like to thank 52% of my fellow British people for giving us an example of how not to solve the problem of increasing geopolitical stress. When the UK voted for Brexit in 2016, we voted to leave the world's biggest single market. How's that working out? Well, it turns out that leaving the world's biggest single market isn't good for growth, as the Brexiteers told us, but rather bad for growth. As you can see in this chart, the UK economy is 3% smaller today than it would have been if that 2016 vote had gone in the other direction and we'd stayed in the European Union. You can move to the next slide, please. What would happen if other major economies, the United States, China, Japan, India, Germany, went beyond the specific measures they've taken to block trade and investment and engaged in a more thoroughgoing retreat from globalization? Well, there's lots of ways that could happen and lots of ways of measuring the impact. The big takeaway, though, from the range of academic studies which have looked at the risks from geoeconomic fragmentation is that the impact of a retreat from globalization would be significant and it would be negative. How about if we take a more targeted approach? Could we, as Hank Paulson suggested at the New Economy Forum in 2019, build a high national security fence around a small yard of critical technologies? Well, maybe, but as we can see from the US move to block sales to China of leading-edge semiconductors, that approach is far from straightforward. Yes, semiconductors have a military application, but they are also commercial technologies in use in everything from smartphones to automobiles. So should they be behind the national security fence or not? To me, the answer isn't clear. So before we get too gloomy, and perhaps it's already too late for that, but here we go. Before we get too gloomy, let me point out that there are winners as well as losers from increases in geopolitical stress, opportunities as well as risks. Workers in Arizona, in Dresden in Germany, in Kyushu Island in Japan, are cheering the arrival of billions in investment dollars as TSMC diversifies its geographical footprint. The economies of Mexico and Vietnam and others are benefiting as trade starts to flow through new routes, avoiding geopolitical fault lines. Investment in infrastructure and innovation in the United States is undergoing a generational increase as Washington, D.C. attempts to prep the US economy for the challenge of intensified competition from China. And when we snap open the new Huawei smartphone, we find a more advanced and domestically produced semiconductor. Perhaps competition with the United States is in accelerating the pace of innovation in China. Joe Biden and Xi Jinping might not be able to solve the big problems when they meet at APEC, but as you're going to hear from our next speaker, who's going to talk about a coalition between China and the United States in the fight against cancer, even if we can't solve the really big problems, there's still some important things that we can do together. There are winners as well as losers from the increase in geopolitical stress, opportunities as well as costs. The big picture, though, is a troubling one. And that means we have lots to talk about, lots of problems to solve at this year's New Economy Forum. Thank you.
We will now take a short coffee break. Please take your seats. Our program will resume shortly. Please take your seats. Our program will now resume. Please take your seats. Our program will now resume. Please welcome our panelists, CEO of JERA Asia, Toshiro Kudama, Deputy Minister of Trade, Industry and Competition for the Republic of South Africa, Fikile Majola, CEO of Industry Capital Partners, Ingva Slingstad, Senior Research Fellow at the Energy Studies Institute of the National University of Singapore, Yao Li Shah, and our moderator, columnist for Bloomberg Opinion, Javier Blas.
Please. Ladies and gentlemen, very good morning on our second day here in Singapore of the Bloomberg New Economy Forum. We discussed on a panel yesterday a lot of the implications of climate change and the push for decarbonization. We are going to continue having the conversation on climate change, decarbonization and energy, but with a bit of a different angle, focusing perhaps a bit more on the energy side. And have an excellent panel from private sector, public sector, academia, traders who are buying and selling energy on a daily basis. And perhaps let me start with buying and selling energy on a daily basis, because I was checking the temperature back at home in London, and I think that for my return to the UK, the forecast when I land at Heathrow Airport is about 1 degree Celsius. It's rather chilly and a bit colder than here in Singapore, unfortunately. I'm looking at my heating bill for the winter, and last winter we were going with a lot of concern, worries in Europe and here in Asia also. So when you look at the winter, and Toshiro, JERA is one of the largest buyers worldwide of LNG, so you really have a very good view. How you see this winter, or if I may put it more personal, how do you see my heating bill this winter?
Thank you, Javier. Yes, it's very difficult to predict anyway. I mean, in this, autumn in Japan, once the Mount Fuji is covered with snow, but suddenly it disappeared yesterday and coming back.
You have one of the warmest starts of ever in November.
Yes, in Japan, yes. So very difficult to predict. That's my answer to you in a quick month.
Does it look a bit better than last winter, at least?
I believe and hope to be so, yes.
Ingve, if I may ask you, from Norway, you probably are the second supplier of gas to my home after the British North Sea. How do you see the winter?
So I think if you go back 6 months, there was a lot of uncertainty, but development has been quite favorable. We have more in store, both of gas and also hydroelectric power than maybe was expected. So it's hard to predict weather, of course, so we'll see how it develops. But I sense a bit more confidence this autumn than last autumn.
What that means for consumers is probably lower prices?
Well, this, you have to ask the expert here, but at least the sentiment is slightly better.
Okay, well, the winter for North Asia and Europe, in the Northern Hemisphere, is perhaps looking a bit better than last winter, but as the panelists are indicating, a lot is going to depend on the weather, and we simply don't really have that. It's one business, energy trading, where you really have to make a bet on how the weather is going to look like in January and February. That makes a very, very interesting market. Let me come back a bit and put the wide-angle lens on the current energy situation, which has changed a lot over the last 2 years, particularly because of all the geopolitics and the Russian invasion of Ukraine. In energy, we often talk about a trilemma, how to square reliability, security, with affordability, low prices for consumers, prices high enough for the producers to continue making investments, and sustainability, moving away from fossil fuels into clean energy sources. I think that for the last perhaps 20 years in that energy trilemma, we have been moving more towards addressing sustainability. We were more confident on the other two. That has changed significantly over the last 18 months, 24 months. And I just wanted to take a stock, and Deputy Minister, if I may go to you from public policy. On that energy trilemma, where do you see first, if I may ask you, the world, and perhaps later with the African lens, but just generally, where you see from government, we do have a trilemma, how we address this. What do you see?
Thank you very much, Javier, and thanks for having me. Let me just start. I promise you that I would really want to enter this discussion from an African perspective to where different lens. I was listening just now. You're talking about energy price and what it means in winter. So for someone sitting in Africa, so the question will not be price, it will be availability of energy. So with regard to, firstly, the situation, the geopolitical situation we now face in the world, this subject has been deliberated upon since yesterday, quite at length. Firstly, I would want to say that from the South African government, we think that the world have got to act swiftly to help resolve the conflict and the war in Ukraine. When the war started, that had very major implications, in particular for the African continent. You would remember that my president and a few other African presidents had went on a peace initiative to both Russia and Ukraine, given the implications on inflation, food prices, energy prices that it has on the particular African continent. So I want to also add my voice that on something that has been discussed since yesterday, and I think South Africa, for many of you, is known on this question, on the conflict in the Middle East, something that we think that requires, as Minister Vivian yesterday said, it is something that we've got to confront head-on, and it's got to be solved, and we've got to find a solution for it. Otherwise, it's going to be a mutating problem.
Licia, can you talk a bit about how governments, policymakers, academia sees this energy trilemma from the perspective of Southeast Asia?
Well, I think, personally, I think energy security is just a fossil fuel supply security. So for this region, I think because many countries are still using coal, and it can be foreseen that in the short to medium term, they will continue to depend on coal to generate electricity because coal is the most effective energy resources for them. And to be honest, so for the people, they just use whatever energy resources which is affordable to them. So coal will continue to be a major source for many countries in Southeast Asia to generate electricity. And yeah, it's very difficult to balance because coal is not the so-called clean energy. So in the short to medium term, I think for these countries, they need to make more efforts to mitigate the climate change and to search for other kind of relatively clean energy resources. But yeah, to be honest, it's a little bit difficult to balance. But what I would say is that for this region, I mean, because most of the ASEAN regions are small to medium-sized countries, so I think they must be very careful with the pace of energy transition. So it's not very realistic or not very practical for them to transit immediately from, I mean, very quickly from coal to renewable energy resources. So the most immediate solution may be natural gas. But natural gas, of course, is more expensive than coal to the region. So,
do you think that be a bit careful has accentuated over the last 18 months, that countries are going to be even more careful?
Not even more careful, but generally, I mean, it's just a general point of view. I mean, generally for countries in this region, they have to be careful with the pace of energy transition, and we need to make sure that the energy transition will not affect energy supply security to this region, because these regions are still, most of the countries in this region are still developing countries, the so-called emerging economies.
Toshiro, a lot of those countries that Licia is speaking about are your clients. When you talk to them, what do you sense?
I mean, yes, if you look at the Southeast Asian regions, the economic growth, even the COVID-19 situation, above average 6% GDP growth. So if 7 in 10 years compound, the GDP will be doubled. So along with that, the energy demand will be doubled in 2035. It's IEA's prediction. So, and look at renewables. If you look at this region, yes, but since it's intermittency and not so sufficient transmission line is compared with Europe or United States, it's very difficult to support fully support the economic growth of this region. So that's why I agree with Lin-san that in transition time, LNG will be coming up, and later stage, low carbon fuel like hydrogen, ammonia.
But LNG has got a lot more expensive. I mean, some of these countries are now effectively priced out of the market.
Yeah, that's true. I mean, yes, after the Ukraine, I mean, energy spot prices soared a lot. So that's why the many emerging economies are suffering from buying such kinds of nice low carbon fuel. That's true, Javier.
Do you think that those countries will regain confidence that they can use gas as a bridge, considering the experience of the last couple of years with prices?
I believe so. I mean, anyway, in traditional manner, we need natural gas or LNG to be placed in Asian economy and then come up to the much cleaner energy like hydrogen or ammonia will come.
Yes.
Imbe, can I go to you on the same topic, and then I will go to the Deputy Minister?
Well, so I think it's been this discussion about energy trilemma, that is somehow we're sitting here and weighing security and affordability and sustainability of energy. I think the major lesson from 2022 is that there's a clear hierarchy. Energy security first. And if you can just see that on the price inelasticity of energy. So Europe managed to bring down energy consumption, total consumption, with roughly 10%, but they had to triple prices electricity prices, both in gas and electricity, to make that happen. I think the major lesson of 2023 is that sustainability takes second seat to affordability, and you see that in many parts of the world. So I think it's kind of security first, and then affordability, and then if you're lucky, we have some extra energy to put into the whole issue.
Do you see a change of that? Can we change the order of those three?
Well, you can see how hard it's been, right? If you think about what is happening now in the discussion, is about who's actually going to bear the costs, whether it's in COP28 or whether it's policy discussions. It doesn't seem like in most societies we're able to keep up the pace that we're supposed to keep according to what we promised.
Deputy Minister, in South Africa, you are relying quite a lot on coal. You are making a big push to start expanding your renewable capacity. Have seen a lot of solar installation, in particular, coming on in South Africa. But when you look, and perhaps you can give us a bit of the, as I said, perhaps the African lens, the continent view. But how do you see? Because you are putting energy security and affordability at the very top. You need to develop your economy also.
That's correct. He's sitting next to me, so I agree fully with him. With regard to the energy trilemma, so for us and the African continent as a whole, the big question is security, energy availability. So you've got to deal with the questions relating to costs, and the second issue that we're quite worried about is sustainability. But our first order of business is energy security. 640 million Africans out of the roughly 1.3 billion that we have no access to energy at all. So the order of business for us from South Africa, for the African continent, is to ensure that we can ensure access to those who don't have access to energy. So obviously the issues of cost come up. And I want to be clear on this, that our emphasis on energy security does not mean we do not understand the seriousness of the energy sustainability. Climate change for us has been a real thing. In South Africa, in April last year, we had seen some of the worst floods. Just I think in one city, we lost 425 lives, more than 124 schools lost, more than 14,000 houses destroyed. So it's a real issue. So when we say energy security first, it's not as if we're not thinking about the existential crisis posed by climate change. So energy sustainability is very important for us.
Licia, can we bridge from an energy security point of view? Can we bridge the concerns that you need energy security, you need cheap energy for developing countries? Mm-hmm. Is any easy way that we bridge that with renewables, with more wind, solar, and use those to provide energy security and also perhaps try to bring those prices down? I mean, is that how we can do that? What is the role?
Yeah, very good question. Actually, I was just about to talk about this. So I think future is still bright because here in this region, we are endowed with rich solar power and wind power. So we have rich solar and wind resources. But the problem is wind and solar is intermittent. So they are not 24 hours per day. So we have to, combine kind of the renewables, the wind power, solar power together with coal. Like for some countries in this region, they already require the coal-fired power plants to burn some, to incorporate some renewables. Like they are requiring the coal-fired power plants to burn some, like for example, biomass. So we are on the process to combining the coal-fired power plants or combining the fossil fuels to some renewable energy resources. So, but simply because the fact that because renewables are intermittent, so we have to have kind of, baseload fuel. And here in this region, the baseload fuel is still coal. So, particularly in the times of energy crisis, we must be very careful with, in dealing with such things. But future is still bright. But it's just because we need to guarantee the energy supply security, we may sometimes have to slow down the energy transition process rather than accelerate the process. But again, future is bright.
Deputy Minister, what is the role in developing countries across the world for nuclear? And South Africa has been thinking, it's expensive, but it can provide some solutions, but also at a certain cost.
Suspensive. Look, our approach in general terms is that we have had experiences across the world with regard to nuclear power. But in general terms, our own experience with regard to an existing nuclear plant in South Africa is that it has been safe over many years, and it produces currently the cheapest of all forms of energy in our country. So it is an attractive solution for us as South Africa. There are issues with regard to costs, which have been very controversial in our country with regard to making that choice. So we do think that as part of the current energy mix that is being implemented, that we do want to pursue nuclear energy, but we think in smaller packages, not the mega plans that we're thinking about in the past. So we think it's an option for us. It is part of the current policy of the government's energy mix.
An area very interesting on the energy trilemma when it comes to security is not just for countries which energy they are using, but also where they are importing some of those, the means to produce the energy. And I mean where the solar panels are coming, where the wind turbines are coming, or where the fossil fuels are coming. And recently, and Asia, particularly on the green transition, is playing a big role because it has a very low cost of production for some of those wind turbines and solar panels. But recently we have seen a movement both in the United States and Europe to try to develop those supply chains at home, perhaps for industrial policy, for national security reasons. Where do you see the trends going, Imve? Where do you think that the US and Europe in particular want to go?
So I think you have this longer-term security question about how do you actually source everything you need to develop the new energy sources. Of course, solar is the most obvious one. More than 90% of components are made in China. Wind a bit less, but it's the same picture. Now, I think it's a much more important issue there is how this develops over time. Because it is requiring a huge amount of subsidy if you want to have a local sourcing of this, as we talked about yesterday, produce where you install and source where you produce. That's very unlikely to happen in Europe and US to the scale that we're talking
about. Toshiro, where do you see there the trends? Because that's Japan is going to be, has very, very close links geographically and economically with China, but at the same time probably wants to see their own supply chains.
It depends. If you look at India, just India, they produce. That's a law to say produce domestically the panels and windmills. So that's the trend. And Japan is not so exceeding such kind of policy to implement at this moment.
Licia, how do you think Asia sees this movement of European and also the US to trying to develop their own supply chains away from supply chains in Asia for green technologies?
Well, the green technology, I think, because, Southeast Asia is a powerhouse. So I do not think it's very easy to, when we are talking about the supply chain, because Southeast Asia is also a manufacturing base of like the, solar PVs. So yeah, I think, I believe Southeast Asia can still contribute or can still, continue their role to be, continue to play their key role in the supply chain, particularly in the solar PV and wind turbines sectors. So yeah.
Before we continue, please a reminder that you could send questions to me for the panelists using the app. They will come on my iPad. So I encourage you, if you have any particular questions, to start sending them ASAP as we go into the last 5 minutes of our conversation. And I want to change gears a bit and talk about foreign policy and energy and what has changed in the last couple of years. Perhaps I can start with you, Deputy Minister. When you look at the implications of climate change and energy security and affordability from a foreign policy, when you're having discussions with colleagues, with cabinet colleagues in South Africa, what it means, the kind of the new wall of energy for foreign policy relations?
I think in particular, the war in Ukraine has had major implications with regard to what we do on the foreign policy side and the issues relating to energy. During a discussion that the African presidents had with the leadership of France, so President Ramaphosa makes this example about access to medicines during the pandemic and how the rest of the world, in particular the richer countries, behaved in relation to that. So I just want to make another example with regard to energy. So when the war in Ukraine broke out, and it was at a point where South Africa was quite committed, coming out of COP26, quite committed to ensuring that we can push harder on the sustainability side to respond to the challenges of climate change. So as the conflict began in Ukraine, so there have been many governments across the world that we think that without any hesitation had resorted to other forms of energy that we had thought that there was consensus that we're moving away from. So then the question arises in a domestic situation that so when we have the pressures that we have at home, and we have been told that we've got to play our part in response to the climate change challenge. But in particular, the countries that are richer than ours have the flexibility to simply move back to the cheaper sources of energy, and we don't have that choice. So I think the war in Ukraine has had the implication of beginning to unravel what was beginning to be a consensus with regard to where we're going. So because the question does arise, people say, when it comes to the citizens of those countries, they don't hesitate to ensure that there's energy security, but you want us to sacrifice in order to think about the future. So it has major foreign policy implications, but I can say this. We'll stay the course as South Africa with regard to the international commitments we've made. What we want everybody to understand is the level of development of where Africa is, so that the transition that we're going through is balanced, takes into account the uneven development levels across the world.
Let me ask you a rather perhaps politically incorrect or very blunt question, but when you go to meetings with European policymakers and they tell you that you should phase out coal in South Africa, and you see Germany reactivating coal plants, what do you think, really?
So, you are a journalist. I can't be that blunt. But that's the point I'm making. So, to be frank, so we sit at home and in the region. In fact, in South Africa, we're in the process of decommissioning coal-fired powered plants as part of the commitments that we have made. So when the war in Ukraine started, so we saw some countries, with no hesitation at all, switch back to nuclear, switch back to gas, switch back to coal-fired power plants. So it does have an impact with regard to the consensus that we are trying to build with regard to the sustainability of our energy sources and with regard to the future of the world. So I think I can be quite frank on this one, that it is one of the things that you would see back in South Africa. People are beginning to say that we are committed to the agreements that we have made internationally, but the security of energy for our people should be a priority.
That's very clear, Deputy Minister. Thank you so much. We are going to end it here, but it's a very interesting point of the discussion because not every country in the planet is at the same speed in the transition on the energy needs and their economic development, and the different nature of that development, it needs to be taken into account when we are thinking about the future of energy. Thank you so much to my panel, and please join me in thanking the panel. Thank you.
Thank you.
Please welcome former U.S. Secretary of State Hillary Rodham Clinton and Bloomberg Editor-in-Chief John Micklethwaite.
Right, the camera over, which is there. Thank you so much. Throughout this whole event, and indeed throughout my travels in Asia over the past 10 days, there has been a consistent demand, I think, for an authoritative American voice and for a sort of vision of how the world might look. I'm delighted to say that we are very lucky to have former Secretary of State, former Senator, former many things, Hillary Rodham Clinton with us. Thank you very much for being here. You are, in my experience, the first person to get a round of applause before you've even begun at this forum, so you're already ahead, and I should point out you have nobly come at a fairly late time in New York. And our idea was to do a tour d'horizon and begin in Asia and gradually head west towards America. As Secretary of State, you talked about economic statecraft and the importance of binding together national security with economic policy. And the message you get here repeatedly is that that message has gone. There was a time when America could come here and talk about trade policy. Now when countries around here talk about trade, they tend to get pushed away. Do you think that idea of economic statecraft, particularly in Asia, is missing nowadays?
Well, John, thank you for that question, because I think it's a complicated one now. I think there's always room. In fact, there's a necessity for economic statecraft. But the definition of what we mean by that and how it's practiced certainly has changed in the last 10, 15 years since I first started using it. because you're absolutely right. Post-COVID, post the challenges with supply chains, post one, now two wars that are challenging the global order. What do we mean by economic statecraft? Well, I think it does mean to continue through diplomacy in any way appropriate to find economic connections, networks, agreements that will enable countries to cooperate peacefully, to enhance their own economic positions, to find a way to satisfy the needs of their own citizens and to add to the global economic output. And it is very different today than it was. And I think whether we're talking about how we create economic statecraft around moving toward a clean energy system, or we look for ways to create more connectivity, both through actual trade and through the kind of cooperation that countries need to engage in. The definition is changing, but the necessity for us to practice economic statecraft remains.
Can I just push you on that a bit? If you visit any country here, Indonesia, even Singapore, Malaysia, all these places, they will all say the same thing. What they want with America is a trade deal. When they deal with China, they get a whole menu of economic possibilities. With America, they really want some kind of formal trade alliance. But that seems to have gone. Are you saddened by that?
Well, I am. I do think that it would be beneficial to the United States as well as to the countries you named and many others if we could define trade agreements for the age in which we find ourselves that has to take into account, particularly in the United States, some of the concerns that citizens and businesses, workers, unions all have about whether trade agreements will really benefit them. We have to take into account with many other countries what really is the openness on the other side of the agreement. How willing will countries be to open their markets to American businesses? So I think we need a new era of realistic trade agreements that take into account where we are in the world today, that understand we have new stresses and pressures, and that can make a case, particularly in complicated societies like Indonesia, like the United States, that any agreement is going to benefit not just a very few large businesses, primarily multinational ones, but will get into medium-sized and small businesses, will benefit consumers and workers. We ought to be able to make that case. But historically, those have not been high priorities for many trade agreements. And one of the things that happened with the TPP is that it did not adequately explain what the benefits would be beyond a very, relatively small set of sectors and businesses within those sectors. So it's up to leaders, both government and business leaders, to make a better case. And I think we could do that, but it means adding that to the big agenda that many people are already facing. And so we have to make a special effort to try to begin once again to talk about trade agreements, but with an eye from the beginning to make the case for those trade agreements, not negotiate behind closed doors, then come out and then have people express their disappointments and opposition.
You talked about realism. We now have the meeting between President Xi and Joe Biden next week in San Francisco. There was a nice line from the Singaporean foreign minister here where he said, yes, the weather might get a bit better. We might have a deal on fentanyl, but the climate generally is getting worse between the US and China. Again, I think people would say it was better when you were around. Is there any sign of things getting better, or are they just going to get worse for a while and then maybe stabilize?
Well, I'm hoping that more comes out of the meeting. It certainly is a confidence-building opportunity. There hasn't been as much interaction until relatively recently between the Chinese and the United States governments. There has been a real chill coming from China about businesses, American businesses, other businesses inside China. And then there are, of course, political pressures against China within our own political system. So this meeting is a terrific opportunity to try to reset the table, so to speak, to try to create some opening. But it has to be followed up on with a lot more interactions. I was very pleased that Secretaries Yellen and Raimondo and others have been going to China in recent weeks. Nothing substitutes for the effort being made to have those kinds of meetings about strategic and economic concerns. I think a lot of what happens in the future really depends upon what Xi Jinping's goals are. Part of the reason it was, somewhat more positive when I was there, and we had a very regular set of meetings, is because Hu Jintao was a Chinese leader who decided he would not stay for life. He would fulfill his term. He would follow the guidance of the Chinese Communist Party. There would be a transition, a new group of leaders, some holdovers, but, other new faces would be in power. And so there could be a constant renewing of both the Chinese government and, through that, the American relationship. Once Xi Jinping decided to stay in office for life, that creates a lot of challenges within their own system. And I think we're seeing some of that with the removal of top officials, some of the economic problems in the Chinese economy. But it also creates a kind of chilling effect in terms of relations. I mean, how do you deal with somebody who's not going to be held accountable? Their system of accountability was certainly different from ours, but it existed. And now it doesn't. And so part of what I hope will come out of this meeting is an attitude by President Xi that, he wants to get back to some kind of regular order, that he sees it in China's interest to really dig in with President Biden, develop a platform for discussions, for problem solving, look for ways to cooperate on whether it's, climate change or other matters that may be of mutual interest to us, really sending that signal. I think he will find a receptive partner with President Biden if that's available.
That's a very interesting perspective. I'm going to rush you slightly towards the Middle East, which I've seen you've been talking about this week, Israel and Hamas. I think you are in favor of a humanitarian pause or pauses, but you're against the ceasefire, which many people in this region are asking for. The numbers of dead are rising rapidly, 10,000, according to Hamas, admittedly. But you still got like 89 dead at the UN, which is a gigantic number for the United Nations, the Red Crescent and so on. Can you perhaps explain why you don't want a ceasefire?
Well, I think there is a difference between a ceasefire, which would, in effect, freeze the situation in Hamas's favor. I negotiated a ceasefire between Israel and Hamas in November of 2012. And at that point, both parties did not want to go any further. The breaching of a pre-existing ceasefire by Hamas with rockets being sent into Israel had not caused a lot of damage. There had not been the horrific massacre that we saw on October 7th. And there also had not been the development of the infrastructure of terror that Hamas has built in Gaza. I don't know any nation represented at the New Economy Forum faced with the kind of assault that Israel was faced with by Hamas that would not be, number one, defending itself, and number two, trying to prevent it from happening again. Because with every other ceasefire, it did happen again until finally we got to the breach of a ceasefire, which was in existence on October 7th with the terrible attack by Hamas. So a ceasefire, if it were possible, which frankly I don't think is possible. I don't think, Israel is interested in a ceasefire at this point but they are perhaps willing to have what we do call humanitarian pauses for the purpose of both getting aid in to try to assist the civilians in Gaza, but also getting the more than 240 hostages out. You know, these hostages are not just Israeli. One of the biggest groups of hostages are workers from Thailand who are working on farms in Israel. So there is a global dimension to the hostages that a pause could perhaps inspire some willingness on the part of Hamas to let the hostages go. But a ceasefire that would freeze the situation at this point is not something that is going to, really undermine Hamas's capacity, especially with 200 miles of tunnels that they have constructed over the last decade, to launch yet another attack on Israel. And that would be intolerable. And I think it would be intolerable for, any nation represented at the forum.
There seem to be kind of two big theories going on about this war. One is that this is the end of the peace process. The other, which you champion, the other is that this is, if nothing else, this will prompt finally some move towards a two-state solution. Which side of that do you fit on?
Well, I actually try to fit on both. And I'll tell you, John, I think it's important to have some aspiration, some goal that we can look toward. Many of us, my husband particularly, worked very hard on trying to get a two-state solution. And it, frankly, in retrospect, is heartbreaking that Yasser Arafat walked away from the deal that Bill had brokered between Israel and the Palestinian Authority back in 2000. There could have been a Palestinian state on up to 97% of the land from the 1948 division that would have been in existence for 23 years now. So I think you have to create the environment in which there is a chance to revitalize the peace process and a potential for a two-state solution. Hamas is not interested in a two-state solution. They are dedicated to the destruction of Israel. That is in their charter. If you've been watching lots of different outlets over the last month, that is what the leaders of Hamas say. They want to destroy Israel. So Hamas is not a partner for any kind of peace or two-state solution, but the Palestinian Authority might one time again be. New leadership in Gaza might again be. So you have to get to a point where that's possible.
Very quickly, do you think that Benjamin Netanyahu is a partner for a two-state solution?
I don't think there's any evidence of that. I think the Israeli people will have to decide about his leadership. I think there will be investigations about what led up to and what happened on October the 7th. But I think there needs to be new leadership of the Israelis and the Palestinians in order to have any chance at some kind of peace deal, especially a two-state solution.
Can I jump a little bit more optimistically towards Europe? You've had a series of recent results in Europe. You've had in Greece, in Poland. You've had people I suspect you would support winning. In Britain, you're heading towards election, the place which went through Brexit, Boris and Liz Truss. We now have two rather boring men, but they are nevertheless within the general field of what people would regard as compatible, competitive, normal politics. Do you think there is a sign of politics changing at all?
I certainly hope so. I want to make boring popular again. I want to get back to people who get up every day and do the job. Don't think that they are entertainers and performers who need to be outrageous and get a lot of attention on social media. So
I wonder who you're referring to.
I'm for the boring, public servants and government leaders right now.
Bring back boring. On that subject, in your own country, there has been something of a split from the point of view of the Democrats. You have had the big success in terms of some of the state elections this week, with abortion particularly seeming to help the Democratic side, but you've got some pretty bad polls from the battleground states. I think you've come out already saying that Joe Biden is still the answer, but do you want to explain that to people here?
Well, first of all, I'm not a fan of polling a year out from an election. I think to go back to what we were just talking about, there's a tendency among voters, and particularly I would say among Democratic voters in the United States, to always be looking for, the next cool thing. Who's the really exciting candidate that we're going to have. And so there's a lot of churn about what we really are going to look for and end up with. But I believe Joe Biden will be the nominee. I believe he will be reelected. I believe that both on the merits of his record, which is quite remarkable given the difficult political environment in our country, but also because of the alternative. It still looks likely that Donald Trump will be the Republican nominee. I know that's hard for people to believe with everything going on, but that seems to be the likely outcome. And so there very well could be a rematch. And I think in that kind of a rematch, as we've seen in the elections just yesterday, people are kind of moving away from the drama, from, all of the chaos. They want, to just have regular order again. And they voted yesterday for people who are standing up for issues that are popular, like the right to have women make their own reproductive decisions, for example. But you had a governor in Kentucky, a deeply red state, a Democratic governor, get reelected. He made abortion a central issue. He made red flag laws so that people who are dangerous don't get guns, which seems like a very sensible position. He made those really central to his campaign, and he won a very big victory. So I think that Joe Biden will be the nominee. I think Trump right now will be the nominee, and I think Biden will be reelected.
Vote Democrats and dare to be dull.
That's right. That's right. It's the new cool thing, John. Just get out there and show your dullness, but get the job done. Be productive and dull.
There's one area, I'll ask you one serious one, then a slightly more amusing one. But on the serious side, you look at things like Ukraine at the moment. There is definitely a strategy among America's enemies. You could see Putin waiting, perhaps for Trump, trying to dig in and wait, but also, I think also counting on Congress, where you feel that Congress feels overextended. It's got the border, it's got what's happening in Israel. Do you worry about America feeling as if it's overextended and unable to carry out the kind of global policies that you believed in?
Well, up until now, the Biden administration has done quite a remarkable job. I mean, they put together a coalition to support Ukraine, which I think many people would have thought unlikely when Biden took office. So I do think the legislative agenda that Biden got passed is also another very strong indicator of being able to get things done. I do agree with you that it is going to be challenging in the Congress to get more funding for Ukraine, to provide the funding Israel needs, to provide the kind of support that is required to keep our alliances strong around the world. But at the end of the day, I think the president will get that. And I also think there's an opportunity for the president because the Republicans in the Senate have said, we're on board with all of this, but we want to make some changes at the border. I think that, the Democrats should negotiate to see what kinds of changes would be palatable for the Democrats in order to secure the border, in order to make it clear that, Democrats want a secure border and a humane system for people who are trying to enter the United States, but we want it to be orderly. So I think there's going to be a lot of tough negotiation at the end. I think the president will get what he needs.
Just one quick thing on Ukraine, because you mentioned it. Do you think there is any hope of persuading China to come in and help on that? So far, China has had an effect on Vladimir Putin in terms of saying don't use nuclear weapons or saying those are off the ground. Is there any room of persuading them to kind of push him into something closer to a ceasefire there as well?
I don't know the answer to that, John. I think China has played an important role in trying to send a message to Putin not to stretch, particularly when it comes to tactical nuclear weapons. But I think China's also been surprised at how difficult it has been for the Russian military to achieve their military objectives. I think that's caused China to do some serious evaluation internally about their own military. I think that's part of what we may be seeing with some of the changes in military leadership, with the assessment that, everybody thought the Russian military was very effective. It turned out not to be. What are the lessons we can learn? I think the more important decision right now is for the United States, Europe, and other like-minded countries to continue supporting Ukraine, support them with the military equipment they need in order to, hold the line and push back as much as they can. The more equipment that we can provide Ukraine, the more they can defend themselves and try to take back the territory that has been seized since 2022. That should be our objective. That's what we should be focused on. But you said something earlier, which I think is absolutely right. I mean, I think Putin is waiting to see whether Trump can come back. I think, the fact that Trump said when he was president before that he would pull the United States out of NATO is like the fulfillment of Putin's dreams. And so if he can figure out how to hold this in a frozen conflict position, not lose any more ground to the Ukrainians, and wait to see whether there's some opportunity, in fact, probably try to help Trump in the election as he has before, then I think, there may be, a kind of stalemate for a while, and the West cannot be discouraged by that. We have to keep, supporting the Ukrainians to push as far as they can push.
One very last thing. You mentioned the Republicans. On the Republican side, you will have noticed how much traction Nikki Haley has been getting as a woman who was the American ambassador to the UN. Do you think that if Biden were to stumble, there might be room for another woman with slightly more foreign policy experience?
Well, I don't know the answer to that, but I hope Biden doesn't stumble. I hope that he goes all the way to the finish line, because I think he's earned it. He deserves it. And honestly, the only real argument or complaint is that he's old. And you know what? I think everybody who's his age would be very happy if they were as productive as he is and has gotten as much done as he has and traveled the schedule he's traveled. So, I'm going to continue to support him, and I think he's our best candidate for 2024.
That was an immaculate answer on which to finish. We are very grateful for you staying up and doing. Madam Secretary, thank you very much. Bye-bye.
Thank you, John.
Please welcome to the stage Physician Ambassador to China and Asia Pacific at the Memorial Sloan Kettering Cancer Center, Bob Lee.
All human beings may be affected by cancer. With a lifetime incidence of up to 50%, most of us have a family member or close friend who suffered from cancer, certainly my family included. And as a person who treats cancer every day, I can say that there's only one word to describe cancer, and that is evil. It is the common enemy of humanity. Cancer takes 10 million lives around the world every single year. This is a death toll that's a couple orders of magnitude greater than the lives lost from wars and conflict. China and the United States are the two countries with the highest cancer burden. They account for just under 40% of global cancer deaths. And yet the cancer burden is also high in India, Germany, Japan, Brazil. In fact, no country is spared the scourge of cancer. So the solution is to conduct clinical trials. This is the critical step of translating scientific discovery into saving human lives. However, despite heavy investment, with $80 billion spent every year by the pharmaceutical industry, the access to clinical trial is fewer than 5% of patients. And as a consequence of this lack of access with great disparities among people, especially in rural, underserved global communities. The timeline for development of new cancer treatments and prevention can be up to 10, 15 years. And this is increasingly an unsustainable model, and at this rate, we will not see the cure for cancer. So what can we do in this era of biotechnology, artificial intelligence? The Bloomberg New Economy International Cancer Coalition has worked over the last 3 years gathering leaders from multiple stakeholders around the world in academia, in government, in industry, patient advocacy, policy think tanks, breaking down silos and challenging the status quo in improving access beyond that abysmal 5%. And by original research, analysis, initiatives, we are showing that by investing in leapfrog technology such as liquid biopsy, blood test that detects cancer, telemedicine, remote monitoring technologies, and collaboration, we may expand access in diverse global communities, Southeast Asia, Latin America, Africa, and help turn them into future engines of oncology R&D that will benefit the whole of humanity. We launched the Cure for Cancer public awareness campaign, and also we're publishing policy reports to inform government regulations. Now, in fact, regulatory cooperation, the lack of the governments working in silos can delay access to medicines and innovation for many years for patients. And by simply getting the government agencies to work together around the world, we have shown in our analysis that this could save up to 2 million lives every single year. So therefore, the pace of policy innovation needs to catch up to the pace of scientific innovation. And we put a spotlight on Project Orbis. This is an international regulatory harmonization initiative of the US FDA Oncology Center of Excellence, also a founding member of our coalition. Here you can see 8 countries getting together, simultaneously reviewing clinical trial data instead of doing it in silos and doing it duplicative work with each bureaucracy, doing it together and accelerating regulatory approval and access to innovation for patients in need. But you can see from this list, China, India, and many new economy countries are missing, and therefore more work needs to be done. Through policy analysis, Track 1.5 dialogue, government briefings, we've successfully facilitated a cancer collaboration dialogue between US and Australia during the recent state visit by Prime Minister Albanese to the US as hosted by President Biden and First Lady Dr. Biden. Now we are raising the bar even higher. We are very hopeful of a positive cancer collaboration dialogue at the President's Biden-Xi meeting at APEC next week, because there's so much that the United States and China can work together on to save many, many lives from cancer in both countries, not only so, but also the whole world. So I want to conclude with the 5P approach that's coined by also a founding member of the coalition, Jing Chen. By raising public awareness, by opening up political space, empowering policy innovations, advancing patient-centric trials and bringing peace to patients, families, and the world, you see this is an international movement where we all have a role to play, no matter your profession, your background, or which country you come from. And finally, borrowing some words of advice from my Aussie friend, Kevin Rudd, the course of history is not predestined by anonymous forces or fairy dust. It is written by committed women and men, individuals who make the difference. And with the leadership and immense talent in this room, let's do our part to bring the world together and accelerate the cure for cancer. Thanks for listening.
Please welcome our panelists, founder and CEO of Inceptio Technology, Julian Ma, CEO of Supernal and president of the AAM division of Hyundai Motor Group, Jaewon Shin, CEO of Trip.com Group, Jane Sun, Minister of Tourism and Creative Economy of the Republic of Indonesia, Sandiaga Uno, and our moderator, anchor for Bloomberg Television, Haslinda Amin.
Everybody got the memo. We're color coordinated. Good morning. Good morning. There is an urgent need to accelerate the revolution in mobility to help us fight emissions, pollution, ensure that cities are more livable. We have China, home to 3 of the top 10 most polluted cities. We have London, the most congested city in the world for 2 years running. Drivers spend about 157 hours stuck in traffic, costing the city of London $7 billion. So what's the solution, the innovation that will help us produce a more efficient and sustainable way to move people around? But Sunny, good morning. Good to have you with us.
Thank you, Haslinda.
How do we ease the stresses in urban cities? Because if you take a look at the capital, Jakarta, home to about 11 million people, it's just slightly smaller than Singapore, home to 5.5 million people. There is a congestion problem in the city. I mean, how are you looking at the stresses there?
Thank you, Haslinda. I arrived from London last night, 1 hour late, because I was told as I reached Heathrow and I went to the lounge, the Singapore Airlines crew, the transportations was held up in traffic for more than 90 minutes. So I suddenly felt, wow, Jakarta is so much better now. Because
it's all relative.
It's all relatives. But Jakarta's average speed was at around 10 kilometers an hour. I ran faster than that when I took over as vice governor 5 years ago. But because of the MRT and the concept of carpooling, Jakarta has improved to about 12 to 13 kilometers an hour average speed. So the key is public transportations and interconnectivity, because we're the first country in Southeast Asia now to have high-speed train linking Jakarta to Bandung, and we built it with the Chinese investors. We also interconnected with the bus rapid transit system, as well as the newly launched light rapid transit. So I think public transport is number one, but EV is one key, because Jakarta was hosting the ASEAN Summit, and we saw the air quality was really challenging at that time. So President Joko Widodo instructed us at that time to accelerate the electric mobility conversions, and we're now, all ministers have been instructed to use electric vehicles. So I use Ioniq 5 from Hyundai, and we also looking at more and more destinations, tourism destinations in particular, to go green, and green transformations and green economies, we think would be able to solve some of the pressing issues, from pollutions to congestions.
By the way, Pat Sandi can run faster because he's an athlete. He runs every day, and very fit. It comes down to technology innovation. Hyundai Motor is currently testing out what's called eVTOL. I know that Jaewon would hate me for saying this, but it is a flying car, flying taxi. What's the thinking there, and what gaps are you trying to fill?
Yes, so as the minister just mentioned, you all probably have personal horror stories having been stuck in traffic congestion. And this urbanization is accelerating. And we don't need any studies anymore. It's happening, and it's going to be even worse and worse. So we have to open the skies for urban environment. The surface transportation alone will not satisfy or meet the traffic demands. And mobility has always been a critical element for progress for humanity. So without addressing this in picture sense, there will be a lot of pain point for all of us as this rapid urbanization is happening. So that's why Hyundai Motor Group and many other also organizations are interested in opening the skies above us through this electric VTOL.
And where are you with it?
So the batteries are the key challenging area. So as electrification of automobiles is advancing, so as battery technologies. Of course, for aviation, every ounce counts. So the weight is really enemy. And as the battery technologies are advancing, we believe this eVTOL or following your flying vehicle will become reality. So for us, Hyundai Motor Group, we are targeting entering the market in 2028. So some other developers, early players, targeting 26 or 25. But the key is whether we can turn this, what we saw on the sci-fi movies to reality.
It's no longer a figment of the imagination. It's here and now. Yeah. And Julian, Inceptio is about autonomous technologies. You're currently testing, or not testing, actually, it's been mobilized already.
Commercial development already.
Yeah. Semi-autonomous trucks. How is it doing?
We focus on the autonomous technology for trucks, the 18-wheelers, the heavy-duty trucks. So we all talk about why we want to have this technology. So if you look at the truck industry, surprisingly, for both developed economy and the emerging economy, the challenges are very similar. First of all, actually, it's a shortage of the labor supply. The truck driver is a very undesirable job. And secondly, this is a notoriously diesel guzzler so there is a lot with the emission. And then it also has a very bad record for the safety. And the driver's condition is not very comfortable. So the challenge is actually across the board in many geography. What we do is that we do not want to stay this autonomous technology as a sort of a future technology which will materialize 10 years later. We wanted to have its impact now. So we started with this semi-autonomy technology. We already mass-produced the semi-autonomous truck starting from the December of 2021 with 2 Chinese OEMs. So far, the result has been quite promising. First of all, it has been deployed across 75% of the highway in China, 60 million kilometers of highway commercial mileage, 0 accidents. And even there is no accidents. And behind that, the risk for the collision is reduced by 70%. And secondly, it is a lot more comfortable. We did a very deep quantified measurements. The psychological fatigue for the driver is reduced by 38%. The physiological fatigue is reduced by 38%. Psychological fatigue is reduced by 11%. So that translates to much reduced workload and much more comfortable working condition. And lastly, the fuel consumption. Compared with the best human driver, the diesel consumption on the per truck basis is reduced by 5 to 7%. That translates to the reduction of carbon dioxide of 30 tons per truck per year. All together, obviously, there is a very significant ESG impact. And on the per mile basis, we managed to be able to save, on the per mile cost basis, we managed to make the saving of in between 5 to 6%. This is actually a lot for a very thin margin logistics
Right, so quite
industry.
a significant impact already. Jane, we had Minister Sandi talking about green tourism.
Correct.
You talk about mobility. I mean, the tourism industry, of course, moves a lot of people. It's said to be a $16 trillion economy by 2030.
Right.
How are you looking at how it can be more efficient and it can be more green and sustainable?
Yeah, so tourism overall contributes to about 10% of the GDP and 11% of the employment. So everywhere we go, governors and also mayors all love Trip.com to bring customers to their region. We work very closely with the destination to make sure we promote a concept of 3 Rs: reduce, reuse, recycle. So all the customers who travel with us need to keep 3 Rs in their mind. Meanwhile, we also work with our destination partners to offer green products. For example, for hotels who have solar panel, normally they are more efficient. For planes who are made in certain years, certain type, the emission can be reduced. For electronic vehicles who can be rented when our customers arrive at the destination, these products will be highlighted. And we work very closely with the tourism board from Indonesia, from Singapore, and other countries to make sure people come to travel in a destination with the mind that they are very sustainable driven.
What conversations are happening, Minister, at the government level?
A lot of conversations is happening with the industry. And on the concept of 360 engagement, all stakeholders are being involved. Because we want to offer something better to Gen Z and the millennials. And when they travel from A to B, they want to make sure they have optionalities to offset their carbon footprint. For instance, if they fly into Bali, when they fly, let's say, from China, they would be able to engage in activities that would offset their carbon emissions. We have a carbon footprint calculator in the Indonesian.travel system, whereby we would offer them to plant mangrove trees, be it in Bali or in Labuan Bajo in Komodo Island, where Jane just visited. And also, we are offering all these activities because, Haslinda, I have a 23-year-old daughter, and the only thing they talk about is environmental sustainability. This is what Gen Z and the millennials now are focusing on. So we're in the process of transforming Bali to be all green transportations by 2030. And the key is not cars. The key is motorcycles, because we sell 8 million motorcycles a year in Indonesia. How do we convert that ecosystem so it has to be inclusive? Because that's the transportations that the people are using.
So how do you convert that ecosystem?
We provide incentives right now up to close to $800 per motorcycles to convert the existing motorcycle to EV-based with battery. And for new products, we are working with big producers to offer this type of environment. For instance, sorry to mention your competitor, Toyota, is putting Bali as one of the pilot projects for this green transformation. So when you arrive in Nusa Dua in Bali, where I see you a lot, Haslinda, basically you're being incentivized to use more electric vehicle with electric ecosystem. EV ecosystem is already installed. So the charging system is there. And that way we are showcasing that the government is not only leading, but collaborating with all stakeholders.
Joan, when it comes to the flying taxis, it is about scale, right? That's the only way you can bring costs down. So what's the plan, and when do you see that happening?
Yes, that is the really the winning strategy, that when it scales up, you have to be able to deliver these new capability and products. Just to give you an idea, you all have flown from all over the world in using airliners. In global airline business, there are about 34,000 aircraft. So when I saw the number, I was actually very surprised that in order to support the global demand, only 30-some-odd-thousand aircraft can actually do that. It's because it's an extremely high utilization. So aviation industry is low volume, but extremely high utilization. On the other side of the coin, the automotive industry is extremely high volume, but very low utilization. So cars that you own, probably 23 hours a day, the car probably will be sitting in the parking lot. So this advanced air mobility will come somewhere in between. So when it scales up, because of the convenience and time saving and safety, which is the most important, people will start to see the value and benefits. And when it scales up, we believe the inflection point will come pretty quickly. Just like cell phones, you probably couldn't imagine how we lived when the cell phones didn't exist. So I think the advanced air mobility will have a very similar impact to our just personal lives. So when it happens like that, the name of the game is, again, how to deliver these hundreds of thousands, perhaps millions of these aircraft to meet the demand. And that's why the mass production capability that Hyundai Motor Group has is essential to bring this new capability to customers.
Is there a rough estimate of that sweet spot where cost and profitability make sense?
Yes, so you have to make this affordable to the general public.
And we're talking about what?
The big way to do it is bring down the unit cost when you make each unit. And so that's why mass production is so important. And also making aircraft as safe as possible, and then maintenance easy. And that relates to also manufacturing and design. So by reducing the operating cost, you will be able to make it affordable.
And for Inceptio, scaling means also exporting the technology elsewhere to other markets. Correct. Where do you see it going?
For the autonomous truck, now we are, as you just mentioned, we just focus on, we already have this commercial traction, and the product is already saving the money to the customer. So economic case is not the issue. It's about, first of all, increase the volume. That comes from different ways. Of course, as you mentioned, extending to other market is one thing which we already started. We see that the challenges are quite universal, and the technology is also quite transferable in many other geographies. So we are looking into, for example, Japan, Middle East, and because of we are still a growth stage company, so we want to find the market close by, for example, Southeast Asia. We are looking these areas and to find and work with our OEM partners and to find the suitable models. We see that is possible. It is possible for us to launch these products in about 24 months. So that is one of the important strategies. Next is about just scaling up the volume. We already have a supply base of roughly 50 companies, and that includes all of the sensors, LiDAR, autonomous driving chips, and HD maps. So as volume goes up, and we see that we want to just further cut costs. So even the individual contractors who run a very thin margin, they can still enjoy this technology. So we take this, in the short term, we take this two-stage approach. But the good thing is that we already have a very proven cases. That is actually the most compelling sort of reason for customers in other geography to take this technology and the products.
What is the biggest challenge to adoption?
Actually, I would say we don't have a, I would say, structural challenge. It is more about reducing the adoption cycle. Very interestingly, because this is a safety-related products, so all customers are very careful in terms of increasing their own scale. They want someone else to have the scale first, and then they do. So building a very convincing case is very important. So that's why that nowadays we focus on a few flagship customers. They are all top logistics customers in China. For example, the JD Logistics, they are basically the Amazon in China, and a few others. And secondly, this ESG angle is getting more and more attractive to Fortune 500 companies. Right. For example, Nestle and Budweiser, they are asking their their fleet suppliers to adopt our technology.
We've been talking about electrification. Where do you see electrification having the most impact, maybe 10 years down the road? Sandy?
I would say, because if you look at what contributes to the pollution level, transportation is about 50%, and this is the number when I was in Jakarta as vice governor, and 50% from the industry. So it has to be both. The industry needs to reshape itself to use new and renewable energies, and right now with the improve and new technology in solar panel, you will be able to generate clean energy for the industrial across our archipelago. Secondly is on transportations. And recently, you asked about the adoptions, how we could accelerate. So I was at the transportations conference with our president, Joko Widodo, and we saw this unique, like a gigantic drone, seated two. They say it's flying taxi, and it could take you from A to B within 2 to 3 years. So it's two-seaters. President and I sat side by side. So we asked, so where is the driver? And Rudy, the guy, his name is Rudy Salim, head of this company, said, oh, you don't need driver because this is completely going to be autonomous. So, and the two of us look at each other, so how do we, if we get lost and there's no signal, and suddenly where you have to land? Oh, then it will land safely. Okay, let me ask whether my insurance and my wife will allow me to be in that flying taxi. So the adoption is going to be on mindset, and first of
building trust
and trust and safety issue, just like what Jaiwan said earlier. When you feel safe, then you could transform. And some of these tourism areas will be perfectly served with your concept of flying mobility. So when we talk about getting from A to B in 2033, in 10 years, because of the rate of adoption is very high, especially in countries like Indonesia, whereby the young generations would like to try how to fly. And this is something that when we see more and more, and it's becoming safer, and security is being guaranteed, and insurance companies are happily underwriting those operations, I think you would be sooner than 2033, you see a lot of transformations from mobility, including electric vehicle.
Jane, the biggest impact?
Yes, I think the green initiatives really gets lots of attention from the new generation. On our platform, if we highlight the hotels or transportation, rental cars or aircrafts, which has a green leaves, the conversion rate is significantly higher. So the young generation definitely prefer to use green tools and transportation methods to travel. So I'm very excited to hear from government perspective, from entrepreneurs' perspective, from major car vehicle perspective, all the efforts is put in, and we are adventurous and willing to try when the safety issue is addressed.
And when it comes to trends that can be anticipated, I mean, what are we not visualizing today? If we talk about ownership of cars, I think it's something like 1.3 trillion cars are out there, mostly privately owned. How might that change with the technology and innovation that we're seeing right now?
Yeah, so I think all the panelists are pointing out really important things. It's a public acceptance. And when you bring the new capability, whether it's an EV, electric vehicle, or autonomous vehicle, or flying taxi, when you bring all these new capabilities, how do we convince public, the users, that this is not only convenient and efficient, but safe? So we are all used to the commercial aviation safety standard. That is one potential fatal accident in billion flight hours. Billion flight hours. So that means it's virtually impossible. So we are all used to that safety standard. So as Minister mentioned, that's why Hyundai Motor Group is not going to have an autonomous flight initially. We'll have a pilot, and making sure that people understand this is, again, not only convenient safety, safety is important.
But initially with a pilot and later on autonomous?
Over time, there is a potential.
Definitely there will be.
That is possible. And some of the ground vehicles, they are already moving into autonomous driving. So again, my point is you have to show and you have to demonstrate the safety, whether it's a ground vehicle or a flying vehicle.
Zhang, when you ease the congestion on the road, on land, does it mean congestion in the air?
Yeah, so people worry about that, but we are dealing with 3 dimensions. So we have been living in 2-dimensional world, and if you think about the road and streets, it's all 2D. Yeah. But when you go to air, you have a 3-dimensional flexibility. So we can stack airplanes vertically, laterally. And I'm not saying we're going to do that anytime soon.
That still sounds scary to me.
But it's expensive. So I don't think we're going to see aerial traffic congestion anytime soon.
But we may, eventually, right? If everybody decides that that is the way to fly, that is the way to move, that's mobility of the future.
Right.
We could get there just like we saw
maybe next
congestions
century.
elsewhere on land. What are some of the trends, Julian, that we might see?
Definitely is driverless. Although, first of all, we are very committed to providing a full driverless experience to our customers. Perhaps that will be 7 or 8, 10 years later, but we see that would definitely happen because of large evolution of the AI technology and also as well as the semiconductor industry. That takes time. So we took as mentioned, we took the stage approach. First stage is semi-autonomy, maybe 5-7 years is full autonomy. But end of the world, we see autonomous truck is actually a freight robot. It is going to be a freight robot. That means that there's no more driver. Everything is dispatched and managed centrally from the cloud. As we can imagine that the logistic operation would be much more simplified and much more standardized. So we envision that for this industry, it is not only about a fully driverless truck itself. It is about a transformation of the logistic format, the trucking format, just assuming that there will be robots, right? it's not difficult to imagine that there will be a few nationwide super-scale free robot network across the country, which provides the highest efficiency, the most timely delivery, and at the lowest cost. So that is sort of our vision for this technology. I think that for the flying taxi is probably similar. It's probably similar. So when they're like flying robots, right? So we think there will be a eventually a network of a large sort of fleet of flying robots.
So what does it mean eventually, right? We see the innovation, the technology, we see plans for green tourism. What does it mean eventually for urban living and urban society? And when will we get there? This ideal way of moving people around.
It's sooner rather than later. And
that is what, 10 years?
I would say within 10 years. And the key is how we deliver not just technology innovations, but value innovations. How do you improve people's life? How you create good quality jobs and make sure like this new transportations will be, because Jakartans pay close to 12 to 15% of their income for their transportations commute costs. So how do we deliver this to the people in general? And you're talking about wide population space. So what type of values are we going to get? In terms of tourism, what we're thinking right there in 2033 is how do we could give value to our customers who wants to, the visitors, tourists who are coming to Indonesia, that they're not contributing to carbon emissions, because our target by 2035 is a reductions of 50% to our carbon emissions to about 4% for the industry. Because yes, it contributes 11% to the workforce and 10% to the world economy, but also 8% of carbon emissions. So tourism is responsible for that. And how do we tackle that with value innovations that would be able to reduce that emission? Secondly, wouldn't it be great if we offer destinations that you could charge your electric vehicle by new and renewables, by geothermal, by solar, or by wind turbine? And this is something that would be valuable to your visitors to come to visit Indonesia. So we're developing 5 super priority destinations: Lake Toba, Mandalika, Labuan Bajo, Likupang, and Borobudur. Based on from A to B, you'll be able to be net zero and regenerative beyond 2035.
Yeah, so for us, it's GE. GE is green initiatives. So we encourage our partners to really use solar panel, wind power to replace a lot of old-fashioned coal-generated power. Our customers really would like to pick the hotels and airlines and vehicles which use new energy. The second one is effortless. Effortless means driverless. Effortless means no traffic jams. So that takes a lot of innovation and investment in the technology to bring the user's experience excellent. So I'm very excited to see the breakthrough in these areas.
So the pressure is on them.
Yeah.
In really a quick summary, in my view, our children and grandchildren will live in completely different world. Freedom from wherever you want to live, and also liberation from traffic congestion, certainly, and then democratization of aviation. So only things that we imagined today and only saw in the movies, I don't know, maybe in 15, 20 years, when all these things coming together, I think we will bring another revolution in transportation.
I think for both green technology and autonomous technology, the past few cycles told us that never underestimate the mega momentum. So it will always come in sooner than we anticipated. So that is why I put my energy and my money in, and I think it's probably where we can put our energy and resources and money in. Yeah.
Zhang, Julian, Jane, the 3 J's, and Pat Sandi, thank you so much for your time today. Ladies and gentlemen, a round of applause.
Please welcome our panelists, founder and managing partner of WonderCo, Jeffrey Katzenberg, chairman and CEO of Sinovation Ventures, Kai-Fu Lee, founder and CEO of Grow Intelligence, Sarah Menker, global chair of PwC, Bob Moritz, and our moderator, senior executive editor for Bloomberg Opinion, Tim O'Brien.
Wow, this is such a great panel, and it doesn't seem like 40 minutes will be enough. Before we get going, we're going to do a poll for all of you to join in on, if you'd like, from your handhelds. The question is, AI will have the most transformative impact on which sector? A, defense, B, financial services, C, healthcare, D, media and entertainment. There's not an answer, there's not an E choice here for everything. So you'll focus on those 4. We'll come back to this poll at the end of our session. There's been such a broad public debate about what AI is and what it will do. I've always loved, not all of Stanley Kubrick's movies, but a handful of them, and I'm reminded around this debate of 2001, A Space Odyssey, where HAL, the computer on board the spaceship, decides that it's done enough help in getting the astronauts out into space and is now threatened by them and wants to take over the ship and begins picking off the 2 astronauts. And I think that's the tension that is around some of the sensationalism in AI right now, is who's in control of it? Is the transformation liberating? Will the bots take control eventually? I think that's been around some of the dialogue in this. But I also think there's tons of promise and many unknowns. And so I hope our panel today, we can kind of cut through some of this, talk about the realities of AI, and how maybe we should begin to think about it. And Kai, I wanted to start with you, given that you've been in the trenches so long in all of this at Google and now in your own activities as an investor and an innovator. AI has actually been with us longer than we really realize. When we talk about its newest iteration, there's been already big transformations that are AI derivatives, machine learning, search algorithms. Talk a little bit to us about how you've seen that evolution over the last, say, 20 years or so, and how you think about this idea of transformative versus a threat, promise versus danger, et cetera.
Sure. Yeah, I've actually worked much longer than 20 years in AI, more like 40 years. And I did my machine learning PhD thesis in the 80s. And back then, from my thesis all the way through about 7 or 8 years ago, AI has been trained a model to do one task. And that works well, whether it's speech recognition, approving bank loans, and that generated a lot of value. But that AI is not reusable elsewhere. And it's taught very differently than humans. Think about us, right? We were not, just trained to do one thing. We have general purpose intelligence. And what this new wave called generative AI is rethink this based on perhaps inspired by human learning. Can we also teach AI generally so that it knows everything, and then on top of that, it can do new things? That would make the task of learning any new thing much easier, and it would give it much bigger, more encyclopedic knowledge behind it. So what you see in ChatGPT and other similar products is a technology that trains what's called the foundation model. It's trained on tens and trillions of words, basically every word ever written. So you can think of it as a huge model which embodies all knowledge accumulated in the thousands of years of human history, from which it can very quickly learn any specific thing you want to do, giving out loans, insurance, entertainment, and all of those applications that you can imagine. So it is truly disruptive in the sense that we have a super intelligent foundation model that can learn any new thing very quickly. And from an investment standpoint, that means it can, you can invest in the company that can very quickly build something. And also the power inherent in the model can allow it to take over and help us on a lot of the routine tasks. And now on the potential danger side, of course, we know there are issues such as hallucination, the risk it could be used for misinformation. It also, since it's read everything and knows everything, one could ask questions that could be harmful or hate speech and can be used to target whatever we saw in Cambridge Analytica a few years ago is now on steroids. So those dangers all exist, and we have to look at using regulation as well as technology to find ways to provide guardrail and minimize the negative ways in which it can do things. Last thing I would say is the comment you made about this 2001 Space Odyssey. We're not at that point. As powerful as this super intelligent AI is, it doesn't have self-awareness and a mind of its own, and has no desired interests or incentives to harm or do anything to humans. We can shut it off and we control it. We can teach it to do things. The danger, I think, is in people with malintent using it to do evil things.
Just to revisit that, it's not sentient. It's software.
No, exactly.
And it's relying on inputs to achieve outcomes.
Right.
I think that Sarah, you've wrestled with the uses of AI in your own business for several years now, and you've deployed against it. Talk a little bit about where you have seen the advantages and the opportunity in agriculture and around food security, and wedding that to AI.
Yeah, I mean, I think it goes back to sort of what Kai-Fu was saying around sort of the initial uses of it, which is train it on a very specific task to solve very one set of problems, right? So when I started Grow, the goal was how do you build a platform and a system that can ultimately predict the supply, the demand, the trade and price of every agricultural product around the world every single day. That's over 15,000 products that we do this for. When you do that, you're initially starting to deal with large data sets and ingesting very large amounts of data about a very complex real-world system. One of the things we had to grapple with was basically this idea. When I started it, I thought it would be easy until you end up with 170,000 data sets and sources to deal with every day. You have to automate the task of how do you actually sort of map that knowledge, and how do you sort of create definition sets, et cetera, around it. And then it was sort of initially around building machine learning models to predict very specific things. Predict the yield of corn in the US in a season, or predict the yield of wheat in Russia in a season, right? So you sort of build that out. And, so our early part of the journey was getting enough data in the system and automating that, and actually using applications of AI in that sort of mapping of knowledge space. Then it was sort of using machine learning and machine learning models to predict specific outcomes or extract specific insights from large-scale data sets. When you're processing hundreds of trillions of data points every day, again, sort of the extraction of insights becomes important. So then you end up having too many models as well. So today we have 2.9 million models. Because agriculture is such a complex real-world system, you're ingesting data about the environment, about the economy, about people. And so that sort of, it's very vertical in its knowledge, right? And sort of one of the things that sort of has really excited me about this new wave is actually the world of horizontal AI coming together with vertical AI, which is how you will actually start to combat things like hallucinations.
So differentiate those two things for us, vertical versus horizontal.
So reasoning versus knowledge. So if you go to ChatGPT today and you ask it questions such as, what were drought conditions in California over the past decade? Or how is drought going to affect rice production in India over the next 20 years? It will give you an answer based on all the words and everything it's learned and try to sort of piece together a story of what it's been, but it's not going to generate a chart for you that actually just shows you what drought conditions for California have been over the past decade. Or what projected sort of drought conditions in India for rice are going to be over the next sort of 20 years. The way I describe it, and I said this to you, Tim, is, when I was in middle school, I was a straight C student. And I'd go to tests, and when I got asked a hard question, I would just write really long answers, hoping that some truth was in there. But it was like, you'd get there. And then when I became a really good student, by the time I was in high school, I was a straight A student, my answers got shorter. And when you sort of constrain ChatGPT to actually a knowledge graph about these issues, and we've done this, where you say, hey, the corpus of knowledge that growth sits on in these issues is a truth that you can rely on, and you ask that question, what it actually generates is a chart that's, one, significantly cheaper than the queries it needs to sort of run and what it needs to train on, but two, actually gives you a factual answer with attribution that means that you can hold someone accountable for that answer in the long term, right? So it doesn't run the risk of sort of that hallucination piece. And I think that becomes pretty tremendous in terms of how we distribute complex data sets to non-technical users that need it for transforming systems that are critical to humanity, like food security, or combating issues such as the effects of climate change.
We can come back to this, but there's an obvious difference between facts and expertise, between knowledge and pattern recognition. But we'll come back to this. Bob, you survey a broad, obviously a massive landscape of different businesses. Are you having any ahas about businesses right now? I guess this gives away some of our survey answers. But where are you seeing the greatest sort of first mover changes right now?
So I think you need to step back from a corporate perspective and the commercial enterprises and go back to what was already said by my fellow panelists. Are the CEOs and the C-suites truly aware of what's available today? Because many of them have not. And there's an underappreciation of the computing capabilities and the AI components that could be used today. And that could be used to deal with what I'll call augmented AI to help deal with the mundane tasks and help people do their jobs better versus the autonomous, which may just replace the jobs entirely. The second thing that you see within the corporate enterprise is a disconnect. Right now, you have a bright, shiny new toy that everybody's talking about, but no one understands completely. We haven't skilled up the users to how to use it effectively and efficiently. We haven't thought about the cost parameters around it. We haven't connected the dot to how much energy usage is needed and the implications to climate and everything else associated with it. And actually, the world today is talking about this as if it's infinite in its capability, yet we actually have a limited amount of computing power. The third thing that is interesting is that you've got every employee in an organization that wants to use it. And the C-suite is struggling with how much to allow it to be used in terms of the access to data, the submission of data, and how do I control that, but also, Kennelly, how it will be used and what kind of intent is there relevant to scalability and the like. So you see a lot of experimentation going on across the corporate community. I think that's a good thing right now as we go through this exercise of learning, looking ahead. The last thing I'll say, though, is each and every sector has an element that is beneficial to them right now. It could be on the creative side that Jeff can talk about. It could be on the processing side that an insurance company or bank could be talking about. It could go in lots of different directions, but one organization or the other has to be very focused on what you want to get out of this before you open up the Pandora's box of going after everything, because going after everything will be a colossal mistake at this given point in time.
You know, when you talk about both the cost and the environmental impact, I'm reminded of crypto and you know, the amount of computing power and power usage that needed to be deployed to just mine Bitcoin, for example. And I think a lot of that was overlooked. We've talked about it in the green transition. You know, the trade-off from fossil to EV isn't really nonlinear. There are costs to producing green energy that also have an environmental impact. How long do you think those things are going to constrain both the deployment and the use of AI?
I actually don't think that we're going to see as long of the transition that maybe some are thinking about. I think the impact is going to be pretty swift. The combination of the yield curve right now and the change curve that's happening is actually enormous. So in the next 3-year period, you're going to see a lot of consumer change behavior and a lot of corporate change behavior going forward, and I think you'll start to connect those dots a lot more so. The question is going to be the economics associated with it and the disconnect on the labor force. We have a huge challenge right now in front of us that if it goes so far so fast without the re-engineering of labor, we actually have a big mismatch which will create more social problems that's going to be problematic, especially going into a slowing economy right now.
Jeffrey, I started with a movie. I started our panel with a movie analogy. You're a storied movie man. And there's been there's been a strike in Hollywood right now between the WGA and the studios over ownership of creativity and control of creativity and where AI slots into that. And talk to me about how you see AI's impact on the creative class, broadly defined, whether it's artists, writers, filmmakers. Do you see it as I think it's going to be revolutionary, but how do you think about the outcomes from that?
Well, when you started with your list of industries that will be most impacted, I don't know of an industry that will be more impacted than any aspect of media, entertainment, and creation. If you look at sort of a historical perspective of, whether we went, from a pen, a paintbrush, a printing press, a still camera, a movie camera, these are things that just expanded creativity and all sorts of storytelling in extraordinary ways. And we've seen how that has continued to evolve, and today all sorts of new forms of media and entertainment. It's been explosive the last 10 years. I think if you look at how media has been impacted in the last 10 years by the introduction of digital technology, what will happen in the next 10 years will be 10x as great, literally, by a factor greater. And I think AI as a creative tool, think of that as a new form, a new paintbrush or a new camera, has so much opportunity around it. I think that it, on the one hand, it will be disruptive and commoditize things that are very inaccessible for artists and storytellers today.
But what kinds of things?
Well, in the good old days when, I made an animated movie, it took 500 artists 5 years to make a world-class animated movie. I think it won't take 10% of that. Literally, I don't think it will take 10% of that 3 years out from now. Not 10 years out.
But to get the movie out the door, which that's a different discussion than what actually inspires the narrative or the creative moment.
Yes, but that's still going to, in my opinion, I think that is still going to come from creativity, of individual creativity. I think these people here are, way above my pay grade in this, but, I think they can express very clearly that you can have access to all of this knowledge. It's your ability to prompt it that actually produces a result. And so prompting is, in fact, going to be a creative commodity and across many, many, many different aspects of storytelling.
Well, so how do you see, what's the happiest resolution in Hollywood right now between this debate that the studio owners are having with the creative class there?
You don't know yet. I mean, again, if you just look at this, has all happened so fast. It's so new. I have bottomless well of optimism. So I'm only imagining the greatness that can come out of that. Will there be businesses and existing stakeholders that are going to be disrupted by this? 100%. But with that will come a whole new set of opportunities. And so you can look at today and say, well, what has TikTok every time a new form has come along, whether it's TikTok or YouTube, they didn't make TV go away. TV didn't, put the movies out of business, and they became new forms of entertainment, and our interests, all of us, got excited about exploring these new forms. And I think that's just going to continue to go. I think it's, as I say, I think we're going to see an escalation of that. I think it's going to happen faster.
Kai-Fu, we talked a little, I mentioned a little bit earlier about the evolution of, and the presence of AI among us. And I think about when the Netscape browser got popularized, it made searching the web more consumer-friendly, more apprehensible to people. You didn't have to go to Usenet or all those other odd, very techie Silicon Valley sort of chat rooms where you had to learn arcane languages to prompt and get results. And I think of ChatGPT in a similar way. It is making a new tool and a new form of software more apprehensible and utile to people who might have felt alienated or uncertain around it before. You have a new product, E34B. I think it's ingested 400,000 different Chinese characters in its...
Actually, several trillion.
Several trillion?
Yeah.
Okay.
You were close.
Okay, yeah, I thought the Chinese characters were a harder form for the models to ingest. So I'll take 7 trillion and stand corrected. But it's also open source.
Yeah.
And ChatGPT is not open source.
Right.
Talk a little bit about, the virtues of open sourcing at this revolutionary moment, and what sort of accessibility and communication and community mean around tools like this to you.
Yeah, I think it's important to understand there's a huge diversity in the needs of the models. It's not a one-size-fits-all. And using GPT-4, as powerful as it is both expensive and it's also not ideally aligned to your purpose. So you may have one big model, but it needs to be trained and aligned for each purpose. That includes industries and applications. Example Sarah gave about knowing more about drought and such numbers. That's industry-wide. Also, I think there are every country has different values. So I think to believe the ChatGPT value represents the whole world and every country and every religion, that isn't the case. It may be a reasonable approximation of the American values, but it wouldn't work in many other countries, in the Middle East, in some parts of Asia, some parts of this region. So there needs to be a diversity that's allowed. Also, there are people who just need to train their own model because of the privacy of the data, because maybe there are researchers who need control, who want to invent the next algorithm. Maybe there are entrepreneurs who want to do that. So open source serves a very important purpose that it makes available to everyone who, for all the reasons I mentioned, need deeper control and isn't satisfied with the one-size-fits-all. So I think that's important. I think also open source is important because it allows a benchmark for comparison. The company I founded believe we have great technology, but why should people believe us, right? So when you open source your model, you're basically opening yourself for scrutiny for the rest of the world, for the accuracy or inaccuracy or vulnerability. So we're very proud of our work, but we're also open to criticism. And also we want to compare to see if we're as good as our model's as good as we think it is. We're fortunately we're right. We're actually currently the most accurate open source model. So hopefully this will empower a lot of innovation in all the areas I talk about. Now, all that said, there is clearly a role for proprietary model because this isn't charity, this isn't philanthropy. The cost of training the model we released was over $1 million. And actually very small. The cost to train a ChatGPT, a GPT-4, is probably easily 100 times that. So, of course, people who spend $100 million to train a model need to have a way to monetize that. So I'm not at all against proprietary models. We will have a proprietary model. And the open source community can't afford $100 million to do one training. So I think in the end, there will be the top-end, best performance, largest model, best reasoning provided by the likes of OpenAI and Google. And then for the rest of us, there will also be open source models that are much less expensive to train, much less expensive to use.
And so they'll be used for very different things, do you think, in that regard then?
Yeah, I think if your need is satisfied by GPT or Google's alternative, and you can afford the cost, then you should by all means use it. But I'm saying 90% of the people will want either more freedom or lower cost.
Bob, when Kai-Fu talked about return on investment, the cost of producing these things, does anybody really know right now, what the sort of trade-off in here is between, cost and ROI?
So I'm going to argue no.
Yeah.
We're at such an early stage that you actually have to think about 4 variables. You went to the R&D and the cost side versus that revenue creation side to monetize. Those are 2 really important values. The other one, though, is the quality and the trust in the product as well. And as was said, the open source element brings an element of that there. It actually decentralizes and desystematizes the potential here for a lot of people to use it. So you've got that continuous improvement and perhaps a continuation of an advancement of trust within that. And the last thing is, as you think about the models that exist, it's not just about the models that are created, but as Sarah said, what is the data that is being used by those models to be brought in? And that's going to be a very important factor for the user to understand better, because you might be limited in terms of the analysis that comes out and therefore what you choose to do with that. So if we're looking at environmental data, think about crops. If we're looking at that just in the Middle East versus on a worldwide basis, we have a totally different outcome that comes out of this. So those 4 variables and the interplay of cost and return and then pricing is going to be something to be worked out over the next couple of years.
And so it's going to make data selection and outcome anticipation valued skills.
Very much so.
Yeah.
So today, and just to bring it to life, we see some models that are out there but that are charging by the word. Going back to where Jeff went, if you're not prompting correctly, just think about that for a second in terms of the cost equation coming on the other side and the inefficiency that comes, which candidly is just the opposite of what we're trying to achieve here. So each organization and entity is going to be thinking about what is that right model. And just like was said before, these tech houses are going through these model evolutions that are so important. You used to have a tech company that used to charge by the number of people you had. It then went to the number of devices that you used. Then it was the number of instances you used it in the data centers that went into it. You're going to have the same thing that happens with respect to AI as well.
Sarah, can we talk a little bit about risk management, and maybe not in a highfalutin theoretical way, but you began your career at Morgan Stanley. You were trading commodities. Farming and commodities trading is about risk anticipation and risk management, as so many things in financial services are. Do you see AI as a game changer around risk management?
Completely.
Yeah.
I mean, it's about seeing around the corner, right? Risk management is one about identifying that so-called impossible scenario and recognizing that it is probable. And then 2 is actually...
So that makes black swans less likely, or we'll still have to live with them forever?
Well, it ultimately takes humans to make a decision as to whether to pay attention to it. Because at the end of the day, you can have these great AI models that give you all sorts of insights or forecasts, but a human still has to make the decision to then change behavior or change an outcome as a result of knowing that, right? So there's 2 things. One is, can we see better around the corner as a result of AI? And I would say absolutely, and we have lots and lots of evidence of that, whether that be in areas like understanding our food balances and supply and demand of food, or the effects that climate change will have, not just on agriculture, but on any physical asset on Earth. That is scientifically proven that we can look around the corner. Have humans, as a result of that, whether that be policymakers and or businesses, adopted it at a scale that you anticipate they should adopt it at? The answer is no. So how do we actually change human behavior is as important in the risk management equation as is the, are you going to get the insights? Because you can have people that ignore insights.
And human behavior is always an unknown, as we know right now. It looks
Tim,
like we...
Tim, if I can build on something that Sarah said. and let's bring it to life, for example. If you think about risk management, there's different elements of risk that people have to manage, right? There's compliance with laws and regulations, for argument's sake. AI today is being used to actually aggregate all the laws and regulations around the world to be most effective and efficient in terms of how to manage for those risks. You go to the other side of the equation in terms of the scenarios and the stress test and the black swans, you're never going to minimize them to go away for the reasons Sarah rightly said, but you at least will have better analysis. The question is going to be, with the AI, are you allowing for the machine to make the decision or the human to make the decision? And that comes back to the type of coding and the biases that you put into this. So those design principles are going to be super important as we think about the management of risk, not necessarily just the mitigation of the risk going forward.
And what the decision horizon is.
Absolutely.
When you decide, do you trust what the machine has said, or do you send it back to a group of human referees to interpret what to do with it? And that's still very nebulous and unknown. Right. It looks like the result of this poll, it's overwhelmingly healthcare as being transformed.
Obviously, this is rigged. It's a false.
Yeah, I was going to say, Jeffrey just can't.
I want to recount.
You think it's media and entertainment? Undoubtedly. So explain why. Explain why. Why are we collectively wrong here?
I don't think you're collective.
Okay.
I think all of these businesses are going to be wildly impacted by it, and I'm simply biased towards the one that I have the most experience with.
I'm surprised that financial services has such a, especially given the crowd here, that has such a low support among people who responded to this poll. Only because there's already been such a transformation through quantitative applications within the financial services industry. I could imagine AI building indices and ETFs that are limitless and have lots of inputs in them that human beings may not be able to come up with. But I lack the
one I'm missing up there is education, which is, we were talking a little bit about that, which is in a very, very short period of time.
Yeah.
Every single child, every single student, everywhere on this planet will actually have access to a tutor, someone who can help educate them one-to-one.
In their pockets.
Right, and we know that one-to-one education is, in fact, the one that has the best value and the best outcome. So the idea that you can have custom to who you are, to your language, male, female, young, old, relatable, funny, serious, Shakespeare, whoever you want, can be your tutor, your teacher, that you can learn from. Just seems to me like such a amazing transformation across the globe. I mean, I do think it's one of the more exciting things that's going to come out of AI.
Sir?
Yeah, so we're investors, so we invest in these sectors, and I think Jeffrey has excellent intuition. But let me say a few words about each of these sectors. Education is huge for exactly the reasons Jeffrey pointed out, but I think our education systems are going to be the most conservative, and most slow to change, and many of them disallow ChatGPT. So I think it's going to be the private enterprise, the education apps, the Duolingo and their next more advanced versions that will do what Jeffrey talks about. Healthcare, I think, is huge, but it relates to human lives. So there's always going to be human at the end controlling, deciding what to do, because we can't, how do you do a malpractice lawsuit against AI? So that human in the loop will slow it down. And there's nothing we can do about that. But there are specific segments for which it may be useful, like AI longevity, AI health check, which I do religiously every year. But I'm afraid it's not going to have that same level of financial return, except for specific segments like drug discovery. Entertainment, I think, is huge, because one of the big problems, because AI, generative AI, is about content creation, and that's what entertainment industry is all about. And one of the big problems of generative AI, which will eventually get fixed, is hallucination. But in some sense, entertainment content is hallucination. It's not like news, right? So it's okay.
So does that mean I get your vote? Are you moving your vote over here now to
I do.
entertainment?
Yeah.
Okay.
He means you're faking it.
I got it. There we go.
We've only got a couple minutes left, but there was a question I wanted to ask each of you, given that there's been this debate about the uses and abuses of AI. And I wanted to ask each of you if you felt like the tech community broadly defined and the regulatory community broadly defined is positioned to sort of responsibly manage this moment. And Sarah, tell me, do you think that AI's promises and possible predations are being well managed or will be well managed as time goes on?
Who's the CTO of the United States?
Wow. I'm the guy who said there were 400,000 Chinese characters in Kai-Fu's model, so yeah.
No, but the reason I asked that question is under the Obama administration, it was actually Megan Smith who had come out of Google and actually spent a lot of time sort of at the forefront educating the public about it. Honestly, I'm asking you that question because I don't know the answer.
Yeah, I don't think we have one.
Right, so every government is going to have a pretty serious CTO, like not initiatives across different sort of departments, et cetera. Like you might have, it has to be a cabinet level position as far as I'm concerned in terms of sort of the type of influence that person's going to have. Well, you're not going to create it, but so the answer.
Obama recently made an argument for just that.
So I didn't know that, but that's good to know.
Yeah.
And so I think that regulators and governments are heavily ill-equipped, and I think you see it as everybody's scrambling right now, trying to convene private industry to tell them. And private industry is private industry for a reason, so everybody's going to go in and promote their best interests by, still sort of taking the broader public. But I think you need to sort of understand that everybody on sort of, at least on the private market side, is going to do what's in the best interest of that business. They have a fiduciary responsibility to generate returns. And there's going to have to be checks and balances that come from the regulatory side. So to the extent that we start to think that companies are going to be great self-regulators, then we're in for a rude awakening.
We are ill-prepared today. And to build on Sarah's point, I'm going to say every minister and secretary actually has to have a point of view on this and downstream effects, because there's going to be lots of intended and unintended consequences. No one systematically is thinking about that. So we can have a CTO, but I'm going to say the Minister of Defense, the Minister of Education, the Minister of Healthcare have to have an equally deep understanding of what this really means. Otherwise, it's going to be chaotic chaos in their individual countries that don't take this seriously.
Kai-Fu.
Yeah, I agree. I think large companies just have too large a conflict of interest to advance their company and stock price, to trust that to large companies. I do think technologists, academicians, open source people can be more level-headed, at least not conflicted. And I do think technologists should work together on finding technology solutions and guardrails, but that alone won't be enough. There will be regulations needed. But if all you look at it is regulate, then that will stifle innovation, and that will not be good.
You get the last word, Jeffrey.
I'm going to take a contrarian position on this, which is I grew up in an industry, and specifically in a couple of companies, one of which I founded, in which we set for ourselves standards and practices. We decided within those boundaries what was acceptable for us, for our company, for our brand, for our customers, our consumers, what fit within the parameters of Disney or DreamWorks. And to say that this is somebody else, every network, every broadcaster lives within standards and practices, that they don't rely on government and regulators to do what they, in their judgment, thinks are correct parameters for this in it. So to simply say, well, it's not our problem, somebody else should figure out how to regulate this, people in DC should come back and tell us what are the guardrails on this, I say no. You have your set of values. I trust you. Apply them. Hold yourself to them. And every tech company that is doing this today, shouldn't say, well, we don't know what's going to happen. We hope it's okay. I don't think that's a noble path to take.
And on that note, we're out of time. We could have kept going. I want to thank our panel. Thank you.
Please welcome back to the stage, Eric Schatzker.
Yes, everyone, it's me again. I had to make a quick trip to the fracture clinic after my interview with Ken Griffin. But they patched me up, and I'm back. I have some important information to share with all of you. Not only are we honored to have you here with us in Singapore at the New Economy Forum, we need your feedback, everybody. You can play a key role in shaping future forums by simply scanning that QR code and completing a brief survey. We really do actually need your feedback. We're constantly trying to improve our programming. We're trying to improve the delegate experience. Those of you who've been with us since the outset in 2018 have seen us transform, and I hope you'll agree, improve over the course of those 6 years. Now, today's programming isn't over. It continues. We aren't done seizing the moment, as it were. There are 2 sets of breakout sessions this afternoon, and we'll bring up some information about those as well. Do want to make sure you get this QR code, of course. The first sessions begin at 1:15, which is in, roughly speaking, 25 short minutes. And then the second set of sessions begins at 2:45. You'll see the rooms appear behind me. He didn't really know it, but Jeffrey Katzenberg was actually plugging my breakout session, the one about redesigning education in the age of artificial intelligence. He is right, of course, that education was missing in that survey, the poll rather, that we took of you. But if you're interested, in fact, I'm not sure being interested helps. You have to sign up for these breakout sessions in advance. If you've signed up for redesigning education in the age of AI, I look forward to seeing you there. And then, of course, don't forget, you need to be back here promptly by 4:30 this afternoon to the plenary hall for a masterclass in geopolitics, followed by an exclusive one-on-one interview with the CEO of UBS, none other than Sergio Ermati. I will see you folks later this afternoon. Thank you.